Given it. Yeah, you have it, Saurabh. Just try. Yeah,
Okay.
now
Okay.
yeah, we are able to see now.
Okay.
Yeah, let's start. I think
Yeah.
we are going
What's the time? I have 10 minutes, right?
at 9:50 itself. Almost we are there.
Okay. So should I start?
Yeah, you can start now. People are also there. Good enough people.
Great. Okay. Good morning, everyone. My name is Saurabh Jain. Today, I'm going to talk about an NBFC in which I have taken a position few weeks back. By background, I am also an ex-banker, but usually I'm not very comfortable investing in banks or lending stocks. Two reason: one, it's a risky business. There's a and management quality is very very important. It is more important than lot of other businesses because there is a huge leverages in play. Banks operate at high debt to equity of 4 to 7x. So 14% portfolio going bad will wipe away the entire equity of the bank. And even much before that, even at 5-7% default in portfolio, due to n number of reasons, the bank will be in trouble. We have seen that happening earlier in few banks. And the second reason is there's a lot of window dressing possible in books, and is done across banks. Recently, we have seen the case of IndusInd Bank, but uh, in the past, HDFC has managed to grow 20% every quarter and quarter, and their exact growth rate was 20%. I am not sure how any business can grow by exact 20% for several quarters over several years. So I think there's a lot of gray area of classification in books of banks. All these things make me kind of uncomfortable investing in lending institutions or banks. But there are two areas, gold loans and housing finance, that I am somehow a bit comfortable while investing in these institutions. So let me talk about gold loans through with the example of my house help in Mumbai, Chaya. She avails gold loans in absence of savings because these guys do not have surplus income or discretionary income. All that they earn in a month is usually spent in their household, running their households. So whenever there's an emergency, that like a medical emergency or education or fees of a college going or a school going kid has to be paid, or there's a temporary loss of job, they need money, and the quickest way and the easiest way for them to is do that is obtain a gold loan. And the other interesting point is, in spite of my house help being living in Bombay, metro like Bombay, for several decades, and the exposure that a metro city gives, she and others like her borrow from money lenders and not organized lenders like Manappuram, Muthoot, or banks. So there is an opportunity for these gold financiers to uh, to capture this market. So if a house help in Bombay is still unaware or not comfortable, imagine the people living in rural areas or villages. So here we see that there's a need and there's an opportunity, and gold loans are typically a case of opportunity meets need in a low risk environment. As I said, I'm comfortable. So let's talk about it a bit more. The ticket size of loans is very small. So few bad loans cannot shut down the company, like what we saw in Yes Bank. Typical few large loans going bad created a lot of trouble for Yes Bank. The assets under management or the portfolio is practically risk free because the security is gold and all the amount is more or less recovered by selling the gold, which is easily sellable, unlike other depreciating assets like vehicles or plant and machinery and real estate in some cases. All the gold loans by these players are for 12 months maximum duration, but the average duration is only 5 to 6 months. So what happens is people pledge their gold only when it is extremely important for them to raise money, and that money, they don't use this loan for any speculative or any other businesses. So typically, even though the tenor of the loan is 12 months, the average loan duration is 5 to 6 months. People want their money, their family jewelry, to they want to get it free from the bank as early as possible. And there's something called an ALM mismatch, which is asset liability mismatch, where in case of a bank or a lender, they have sources of funds and then they lend this money. So when they borrow money for say a short duration and they lend it for a longer duration loan, then there is a case of ALM mismatch, and that can lend institution into trouble, like we have seen in case of ILFS. But in gold loans, typically the borrowings are of longer tenor, but the loans are of shorter tenor. So there's no question of ALM mismatch. So if you invest in a lender, you have to continuously track a lot of things: dressing of books, management quality, ALM mismatch, lot of other things. But in case of gold finances, these things are easier to monitor. So why gold loans? Because there's a market opportunity. Gold loan market is expected to grow at 15% CAGR over next 10 years. So we want to position ourselves in an industry which itself is growing. So the good players will by default grow at a faster rate than the growth of the industry. If you were to end up in an industry which is itself is growing at say 2, 3, 4%, then the opportunity for a leading player to grow is not very high. There's not much alpha over the industry growth rate. But since gold loan opportunity itself is growing at 15% CAGR, it's growing at 15% and it is expected to grow at 15%. And the key players are growing at even faster rates. So this presents a good opportunity. The organized market share is just 35%, with unorganized money lenders and pawn shops still controlling 65% of the market share. Rural areas still account for around 70% of the gold loans, and gold loan is one of the cheapest source of funding for this category of borrowers. So gold loans, the average ticket sizes are for the company that we are talking about is 67,000, 70,000. So below poverty line kind of um, borrowers, for them it is one of the cheapest sources of funding, because any other source of funding comes at a much higher cost to them. It's easy. There's a universal eligibility. Everyone can borrow gold loan. Not everyone can get a unsecured loan or a secured loan, but up to 2.5 lakhs, there's no detailed credit risk assessment done, and the loan is given based on KYC and the value of the gold. Gold loans also happen to be the fastest source of funding, since the need is emergency in a lot of these cases. A lot of these buyers prefer gold loans because they can be sanctioned within few minutes. And the gold loan companies have started tapping new opportunities by increasing the ticket size from 5 lakhs. So the average ticket size is 70,000, 67,000, but they are now targeting higher ticket sizes of 5 to 50 lakh rupees by giving gold loans for businesses, for to shops, for SMEs. Uh, this presents another big opportunity for gold loan companies. So the company I am betting on today is Manappuram Finance. It is a diversified player, but majority of its book is of gold loans, 60%. Microfinance is 17%, vehicle finance is 11%, housing finance is 4%. Ex- except my and it is the second largest gold financing company in India. It has a 24,000 crore gold loan portfolio. It has a successful track record. It's a stable and proven track record with low risk. It's a 34-year-old company, 5,000 50,000 employees, 5,000 branches, and a 43,000 crore portfolio. It is not easy to build a portfolio of 24,000 crores by giving loans of average ticket size of 67,000. So this company has proven itself time and again over last 34 years. These are the numbers for the company for the last 11 years. Company has grown its revenues from 2,100 crore to 10,000 crores, which is a 4.8x jump in revenue. EPS has grown from 2.7 to 14.37, which is 5.3 times 5.3 x growth over 11 years. And the market has rewarded it well. It has delivered 26% CAGR in stock price returns over these 11 years. So what we have seen is it's a low risk opportunity in the lending space. The space itself is high risk, and this company has successfully proven itself. So I have been tracking this company for many years now, but I was invested in it earlier, but for last 2 years I wasn't invested in it. But I have recently made a investment again in this company. So the question arises, why now? What made me invest now in this company? There are two reasons for which I have invested in this company. Let's talk about the first reason, which is the microfinance. So if you look at last year's P&L, the company made a profit of 2,400 crores in gold loan, but microfinance it incurred a significant loss of 811 crores. And this was not unique to this company. All microfinance players faced these challenges in 2022. There were industry-wide losses in microfinance industry. Most companies in this space have incurred loss or reduced profits, but almost all of them have said that Q4 was the worst and the bottom is in place for this business. So what happened, so these microfinance, these kind of cycles repeat after every few years. And similar thing happened just 3 years back in 2022. This is chart of Credit Access Grameen, which is one of the biggest microfinance lenders in the country. 2022, when they said, things have bottomed out from here, around 900 rupees, the stock went to 1700. So it made a 1x move. It doubled quickly once the management started commenting that the bottom is has been made in terms of bad loans. Similar thing happened in another microfinance company, Spanna Spurti, where this from December 2022, it almost made a move of 3x once the microfinance cycle started reversing. And what is interesting is again that now the managements are saying and the industry believes that the bottom is in place, and again we see that huge volume based buying has started coming in, and the stock prices have started going up. Spanna Furti again, this huge volume based buying has come in, and I expect that this should start moving up. If you look, same is the case of Manappuram Finance 2022 onwards. Once the microfinance sector started bottoming out, there was a 2x move in the stock, and this time around, due to this reason as well as another reason that I will talk about, the the stock is trading at all time high already. It is leading lot of lenders in the industry. So continuing on the point of microfinance, I personally don't like microfinance business because of these cyclicality and the risks involved. So what gave me more comfort was that management has started reducing the MFI book. It has been last year, it was Q4, it was 26% of the portfolio was in MFI. The then Q3 this year was 21%. Now it is at 17%, and management is targeting a 10% portfolio in microfinance. So that gives me more comfort in terms of investing in this company. And the other good part is their their core expertise is in gold loan, and they've started increasing their portfolio in gold loan from 51% to 55% to 59% currently. So both these reasons gave me a comfort to relook at this company. And the second reason, why now, is there is some development in the company, uh, which seems very very interesting, and probably these two factors combined together have made the stock to climb to its all time highs. The new development is a very very reputed, uh, experienced player, private equity player, Bain Capital, is investing in the company. They are taking 18% stake in the company at 236 rupees, and now they will be coming out with an open offer at similar price 236, and their stake can climb up to 42%. However, given the stock price has rallied and market has realized that there's a lot more value, I don't think price will come back to 36, and open offer will be successful. And it is not just an investment for them in the company. They have taken joint control of the company. They have appointed a managing director of their own. So so that means that the company typically today is a professionally run company, but I expect that the quality of management will go improve multifolds with Bain Capital coming in. The other good point is, usually when private equity invests, the promoters sell their shares. But in this case, the founder, has not done any stake sale. All investment will of by the investor will flow in the company and will be used for the growth of the business. And Bain Capital has extensive experience in this sector. They have previously invested in Axis Bank, 361 Wealth, L&T Finance, and they are expected to bring strategic and operational improvements in the company. So I use this approach CanSlim. I've been using it not exactly as CanSlim, but both have you. I use concepts derived from this approach. CanSlim approach is an abbreviation. Uh, at, it was rolled out by a very successful investor, William O'Neill in US. It is used to identify growth companies. Each of these letters, alphabets in the word cancelim, stand for something. For example, current stands for current earnings, annual A stands for annual earnings, new stands for something new that is happening in the company, new product, new management. S stands for supply side demand, institutional ownership. L stands for leader laggard. So I have picked two of these aspects, which is leader laggard. Leader laggard means how is the price of the stock behaving, uh, in terms of whether it is leading its industry or it is lagging. So the stock price is at its all-time high, and it indicates that the stock price. um the stock is a leader in term as far as price performance is considered. A stock can only reach an all-time high when there is a serious buying, new all-time high when there is a serious buying backed by institutional support. And so L leader, the stock we have talked about it, and the N in Cancelim in this case stands for new management come investor. Uh, I strongly believe that Manappuram didn't receive a very high valuation in the past because the market was worried and the investors were worried about succession issues because the promoter is aging, and the top leadership was not very very high quality in at Manappuram. But I think a market will re-rate this stock, and it has already started re-rating the stock. with new management being brought in by the investor. The growth had also slowed down because of these issues. Now these will be resolved, and Bain will bring in some strategic and operational improvements in the company, and they have already poured in growth capital. So using this approach, I think Manappuram is very well placed to grow significantly in coming years. It has an opportunity to close. So the interesting thing is Manappuram is the second largest player in this gold loan industry, but Muthoot is number one, and there's a huge difference in their portfolio or loan book. Muthoot has a 1 lakh crore loan book just in gold loans, and Manappuram is just at 25,000. Now, with professional management coming in, growth capital coming in, the Manappuram has a good opportunity to catch up with Muthoot. 65% market still with unorganized players, which lend at much higher rates. So again, there's no shortage of runway for this business to grow. I've already talked about promoter issues and how Bain Capital can bring in growth. So what I'm saying in summary is there's an opportunity, huge opportunity, and now capability has come in, and both have joined hands, and I think this can propel Manappuram to greater heights. Valuations, as I talked about, 10-year median valuation that Muthoot has received on price to book value is around 3.1. However, Manappuram has only received a 10-year median valuation of around 1.9. The peak valuation it has received is around 3.2 times of its book. Currently, it is trading around 2 times book, and I, s- I hope and I see an opportunity for this valuation to be re-rated to these at least to these levels, three levels, which is similar to what the median valuation that Muthoot has been receiving. So, so, so there are multiple levers for growth in stock price. One is re-rating, and second is faster growth going forward. This is a daily chart of Manappuram Finance. This yellow marked candle, this is where the announcement came in of Bain Capital investing at 236 rupees in the company. And then the start, and because there was an open offer that was expected to come in, the stock was consolidating for 2.5 3 months in this range. But potentially, market or some large investors have realized that there's a lot of value re-rating to be done in this company and growth can happen. And so it didn't. Usually a lot of times when an open offer comes, because open offer was came at 236, which is 30% higher than the 6 month average trading price of Manappuram Finance. So, in such cases, when the open offer price is much higher, a lot of times the price does not move till the open offer is concluded. But here, even before the open offer dates have been announced, the stock has started rallying, which indicates some significant and serious buying in the company. The other interesting part is this was last Friday's candle. Stock closed very strongly even after Iran Israel war news, when most of the stocks in the market were down. So this is my thesis for the stock price moving up. Still a 50% gap in valuations with Muthoot, so catch up is possible. The stock is still available at 10-year median valuation. 236 acts as a floor price in near future, so the downside is not much. Give Because 236 is the open offer price, and open offer is still few months away. The stock, as I said, didn't fall on Friday. uh, After you have done your own detailed study, stock can be bought in phases starting tomorrow. I think with 20 to 40% of whatever you have planned allocation and rest on pullbacks. I think there's a possibility based on my chart studies. If you place a pre-market order at 274, 275, you may get a fill. So, you can invest 10, 20, 30%, whatever you want tomorrow pre-mark by placing a pre-market order. Uh, but please do your own detailed study. I have been wrong several times in past in my investments. Uh, I am invested in this company. Things that you need to watch out. There is a downward pressure on yields. The current yield that the company enjoys is 22% on gold loans. uh, Company is targeting bigger size gold loans, which will come at lower yield. So the company is now not focusing so too much on yields or ROA, but focusing on ROE, and ROE can be increased by increasing their leverage. Currently, they have a debt equity of 3:1, which can go significantly higher than this. There's an increasing competition from banks, NBFCs, and startups which operate in gold loan space. Approval for Bain's investment, on which the whole thesis is based, is are still pending. I expect them that they will go through, but they are still pending as of now. Uh, Manappuram and Bain may have not worked together in past. There will be, you know, there may be a lot of management and strategic differences in the existing management and the new management that comes in. So their ability to work together will be critical whether this will be successful or not. Uh, and we need to continuously monitor the growth rates, because if the industry is expected to grow at 15%, the management is guiding for a 20% growth rate next year. So the growth rate has to be at least 20% or near about, for this thesis to play out. So, in summary, we have seen that it is a good company, proven track record, delivered 26% CAGR returns, grew revenues by 5x in last 11 years. A low risk business because of the safety from the gold loan, which is liquid and sellable. MFI sector has bottomed out, and in past they have discussed about doing an IPO of the MFI business, microfinance business. If and when that happens, it will unlock value for the parent company in future. Gold loan has a big long runway. Uh, Management, Bain Capital and management change will provide a new leg of growth, and there's a possibility of valuation re-rating. I have that ends my presentation. I have not gone much into details of in details in the sense of numbers, because my style of investing, I look at broad level technical and fundamental parameters and catalysts and triggers, uh, and past performance broadly, uh, in a company while taking an investment decision. So that's the approach that I have shared with you today. Thank you so much.
Thank you, Saurabh. So definitely kind of undervalued play, right, in the longer run. I have one question for you is what is the impact of the increasing gold prices, right? They can give the loan based on gold price, 80% of that or 70% of that.
So the LTV they can give is 75%, but the interesting point is that because these loans are of tenor of 1 year, so they build the interest of 1 year also into that LTV. So actual LTV is just 60%.
Okay.
And
So
the other interesting thing is, in this business, borrowers don't borrow more even if gold prices go up, because the idea is to take only that amount of funding that is essential, pay back as early as possible, and get your jewelry back.
correct. So my point from the point of gold prices coming back to possibly 85 or 80,000, then their LTV will goes up, right? Considering that number.
Yeah. So
So
current
then,
LTV is around 57. So even if the gold prices correct a bit, the LTV will be within the 75 percent range as allowed by RBI.
okay, yeah, that is the one thing which keeps on stopping me for this kind of companies, change in the basic prices
Yeah.
of the gold and the LTV ratios. I cannot decipher myself at least.
Yeah.
Okay,
Yeah.
it's a good presentation. Any so one more question from Naveen. Can recent regulation regarding LTV can impact gold loan renewal? I think this is the same answer which he is giving already.
They
Right.
are already playing on the conservative side,
Correct.
and also because the average duration of the loan is 6 months. So by the time that gold prices will fall, LTV will tend to cross 75. By that time, that loan would get over.
Yes.
Uh,
Yeah.
One question, Saurav.
Yeah.
Did you get a chance to hear from Bain Capital on their merit of investing such big capital in Manappuram Finance, and any commentary from them, like uh, uh, what uh, what I mean, apart from Manappuram's promoter being aged,
Yeah.
what was the rationale of Bain Capital investing in Manappuram? So definitely, I mean, they would have identified some TAM and all those things. So any insights on that from Bain Capital?
So I looked at the press release by Bain Capital. They talked about Manappuram having credentials, successful growth, and everything. But I think that is all, very generic. They haven't specified exactly why they have invested. Uh, but my sense is that there have been discussions in the past about Manappuram promoters selling stake. So possibly they're getting in at a reasonable valuation in a number two player in gold loans, was the reason.
Yeah,
Because
got it.
gold loans business is not easy to replicate. A lot of people have tried, and banks have been trying for so long, but they have not made any significant inroads.
Right. It's a like a branded business. Like those who have name and trust, people only give the gold to them. So yeah, I
Correct.
agree.
People also, this is right, but people also have trust on the SBI or and other banks. But no one is so focused to process 67,000 average ticket size loan that will have a duration of 5 months. So if you are a banker and you get two loan proposals, one is for, like 1 crore for 10 years versus 67,000 for 5 months. You The no brainer business for you in terms of uh, increasing your book size is to go for a bigger loan. So you need a very very focused player to do these gold loans. People who are doing other different types of loans with higher ticket size, higher duration would find it very difficult to focus on this kind of business.
Right. Yeah, got it.
And it's not easy to set up 5,400 branches across length and breadth of the country. Hiring those, so for example, if you are an SBI, you will have a minimum requirement of qualification, experience, salary range for an employee. But in Manappuram, these requirements and the salary range on offer will be very very different. The cost structures will be very different.
Right.
So one question from my end.
Yeah.
Um, of late, many banks, small, especially small private banks, they started giving the gold loans, and their gold loan portfolio increased significantly, like a CSB Bank or a City Union Bank and other banks. Okay,
Yeah.
so so it is not just the competition they will be facing from Muthoot, but
Correct.
the competition will be from the small private banks.
Correct.
How that will be no, addressed by the management? Any con call insight on that?
So I was really worried about it few years back when all these banks started focusing on these kind of loans. So, but the good part is that in spite of all this increasing competition, they are still able to grow gold loan book by 20%. And Muthoot, I think I don't remember, but it had grown its gold loan book this year by at around 40% over last year. So these specialized gold loan financiers still have some kind of edge in terms of their marketing, the kind of They all of these higher famous celebrities do high velocity, high frequency marketing. So they are able to garner significant business and continue to grow in spite of competition from these small private banks. So that gives me comfort.
Okay, okay. And also, I heard that RBI is coming up with some new guidelines on the gold loans
Correct.
that need to be tracked properly.
Correct. So management has said that they are not worried about it because whatever there's a draft already in place, and whatever this draft indicates, they are already meeting those specifications or guidelines.
Got it, got it. Thanks, Saurabh.
Yeah. Any other questions?
No, I think we have covered all. Thank you once again, Saurabh, for your presentation.
Thanks, Puneet. Thanks everyone for the opportunity. Have a nice day.
So we move to the next presenter, Shekharji. Shekharji, you are online.
Hey, hi, Puneet.
Yeah, hi, sir. Yeah.
Hey, good morning, everyone. Hopefully, all of you can hear me well.
Yes, we can.
Okay, perfect. Let me share my screen. Can you see my screen?
Yes, visible, sir.
Okay. Good morning again, everyone. This is Shekhar. I'm glad to be here. Puneet Bhai is kind enough to invite me every now and then. I think obviously it's a wonderful forum to learn from each other. So I'm going to share a little bit of what I've learned over the last few months. That doesn't mean to say, I understand about this company in and out. No. I'm, keep reading more and more about some of their peers and all that. So we get a sense of, where we are heading. But otherwise, the idea today is to run by the company, what it does, where it is today, what happened over the last year and a half, and potentially what could happen for the next year and a half, right? I mean, that's the primary objective. That said, let's jump in. So before we get into, Rishabh Instruments, typically you look at any of the progression / automation sort of a thing in any organizations, any industries. This is a very layman 101 sort of a cycle, right? You start manual labor, which is nowadays, obviously, manual labor is probably a lot more expensive in some of the developed nations. Because most of them have moved on to the automation and all. But otherwise, typically you start off with manual, then you start using some tools, and then you bring in some instrumentations, which probably can do multiple things at a time. And then you start developing more complex software to automate and make your life easier. And then, of course, the last few years of melodrama that all of us are, listening to almost on a daily basis is how AI is taken over. I mean, I think it has taken over in some of the countries, and the rest of the places it is taking over. So probably we are, a few more years away from there. But Rishabh Instruments plays primarily in the instrumentation part and automation part, right? So that's where their game is, which is why it is more of a sunrise space, something that is going to last for a long time than, being worried about the cyclicality part of it. Couldn't the company go through cyclicals? Of course, yes. Matter of fact, it is in that middle of a cycle right now as we speak. But the industry itself is obviously not so much of a cyclicality is there, right? So that's the reason why I have chosen this company, not specifically for presenting today here, but generally in terms of, my own investment for my own investment portfolio as well, that it is part of a sector which is only going to grow from here on. So before we talk about, the company, what it is doing and where it could head tomorrow, let's look at, in terms of what is the product portfolio. So like I said on the previous slide, it's primarily playing in the instruments and the automation part of it. So you could see some of the products that they have on the slide. By the way, this slide is from their investor presentation, which is pretty nice. At the end of this 25-minute sort of a conversation, if you happen to like the company, my recommendation is go through that investor presentation and the con call and everything else. So I picked up a few slides from there, and then I talked about some of my own pointers. So these guys are mainly into electrical and electronic components, whether it is the temperature controls or humidity control or current transformers, so on and so forth. That is one part. The second major part is their die casting business, which comes out of their Poland subsidiary, which is a pretty niche one, but at the same time, it's probably causing them a lot of heartburn and heart attack. We'll talk about it in a few minutes. And then they're jumping into, rather they already jumped into some of the other products like solar inverters. In fact, they're introducing 2 or 3 new models this year, which they're hoping will show them good amount of growth. And also they're introducing a lot of new products within the metering and electrical components as well. So if you cut short, a good chunk of 60% of their 65% of their revenues comes out of the first 3 boxes. And then the aluminum die casting gives them about 35.5 or something like that. And then the rest is pretty small. So we'll talk about a bit more about those on the following slides. And the fact that they are in the instrumentation and components and electricals part, naturally any factory and every factory, they'll have the opportunity to partner with, which is what you could see, they're supporting wide variety of industries. The part of what I talked about as a sunrise sector, which is where, the futuristic theme comes into the picture. I think we've kind of heard quite a bit about smart cities in India 7-8 years ago, but I think it's probably didn't progress as much as it should have. I think few cities have progressed well, but we still have a lot of catch up to do. You look at the whole country. So there's definitely a theme that is going to happen, irrespective of the political scenarios, right? Whether, even if the regime changes down the line 3 years, 5 years, 10 years, the smart cities is the theme that's going to grow. Nobody can stop it because it has nothing to do with the political regime. It's more of the need, the human need. And same is the case with industrial automation. We are seeing more and more. We keep reading stories about how China has literally automated everything in their factories. But obviously, rest of the countries and rest of the factories and rest of the developing nations, they are not there. So they still have plenty of work to do in the industrial automation space. So when you look at some of these aspects of how the technology and our future evolves, Rishabh is there in the middle of it. Are they the pioneers? Obviously not. But do they have their skin in the game? I do believe yes. Moving on, I talked about how they have their skin in the game. They are in this instruments, etc. But guess what? You could say, hey, Shekhar, you know what? There are 1,000 other companies. So what's the big deal, right? There are literally 1,000 other companies, to be honest. A lot of unorganized as well. But I think if you look at their product portfolio, how they are doing in the various of those products around the globe, that kind of makes us believe that yes, they do have a decent amount of credibility. They do have good amount of market recognition, right? So some of the brands at the bottom of the screen, if you go to Google and then you type Cypham Intensley, Lumel, Microsys, you will see good amount of pages popping up, right? So they are not hidden secrets. They are well recognized brands around the globe, especially in Europe, and they're using this Europe branding to venture into the US and elsewhere. So long story short, yes, they're in a crowded market, but they have their own brand. And then I was talking about the revenue streams and all of that on the previous slide. So you could see a distribution among the key lines there. So one thing that I would like you to notice is the aluminum die castings, which is about this 35.7%. So we're going to talk about it in a bit. But otherwise, rest of the items that they have, the rest of the business verticals that they have, they're all doing well. Aluminum is the story which we'll touch upon. But the takeaway from this particular slide is that they are not novice. I mean, they have their skin in the game. They've been in the business for 40 years now. They have done multiple acquisitions over the course of the year. Let me take there. Yeah. So they have done multiple acquisitions over the last decade or so, acquired pretty solid companies in Poland, UK, China, elsewhere. The most recent acquisition came out of Czech Republic, where they have acquired a company that builds and sells SCADA software, which is basically automation software. I mean, if you come across the Siemens and ABBs or some of those kinds of companies, this is one such peer, Microsys, right? Obviously not at that scale. Siemens is a beast, but it's on that line, right? So most of these acquisitions have actually done well. So which kind of illustrates the fact that these guys know their business. They are acquiring good ones. They know how to run them and how to integrate them with the rest of the company and keep the growth on, right? So we will look at some of the numbers a little later. But before we go there, hopefully this slide connects the dots that they have been able to build their credibility and their market share and branding through multiple acquisitions, and hence you see in many of the products they have the top 5 sort of scenarios. And then this slide, self-explanatory, you look at some of the top-notch companies. So that kind of says that Rishabh is working with some of the top companies in the electricals, electronics, and automation space, industrial auto. So whenever I use the word automation, please read it as industrial automation. So they have that sort of a credibility there. And most of the business that they do with these companies and obviously most of other companies is in Europe. Most of the business is in Europe. Literally 70%, maybe, yeah, 70% is in Europe, I think. About 25% is in India, if I'm not wrong. And the rest is distributed between China and US for now. We'll go to those markets in a minute. Okay, a quick summary before I get into my own thesis about why this company and why not this company. We kind of talked about the electronics part, the die casting, and then they have started the EMS lines. I mean, they have had EMS for a while, but they have modernized it. They have added more lines now, SMT lines, which allows them to build more precise and high quality products. A couple of lines in India and a couple of lines in Poland are coming up, or I mean, half the way there already. So that should be one of the key drivers in the future. And solar inverters I spoke about. In my opinion, solar inverters is where probably they are a bit slow. They had pretty lofty ambitions that they have declared, 6-7 quarters ago. But I think the progress that's been made on the solar inverters is not as much as what they had hoped for. But a couple of new products are coming up in the solar inverters. In fact, one of the product they might have already launched. It was supposed to be in Q1 of this year. And then there are a couple of more coming up. So we'll have to see how solar inverters will perform this year. And if in the next 3-4 quarters also solar inverters doesn't perform, then then probably you are looking at a wrong sector. From this company's point of view, they probably should stop focusing on that. But otherwise, rest of the products are doing well. They are doing damn good in the electronics. I'll talk about the aluminum die casting in a minute because that's an important thesis/antithesis that you need to understand. But EMS upcoming, I think EMS has a lot of future. All of us know it. It's a matter of how these guys can penetrate and grab some of the market share. But otherwise, they have a good chunk. But when I'm talking about EMS, by the way, don't equate this to the Dixons of the world. It's not that EMS. They're more doing the PCBs and that sort of a thing. And then I think I've already mentioned they have multiple facilities in India, Europe, China, and US they don't have yet. In UK they have. Czech Republic obviously is a software company. It's not so much about the manufacturing there. But one of the things that we'll have to remember, about this Microsys company is you look at the industrial automation as a theme over the last 40-50 years. Most of that invention had happened in Europe, not so much in US. Probably in 50s, 60s, obviously US led the way along with Germany. And then once US started outsourcing most of their work in the last couple of decades, they were lagging behind. I mean, obviously, if you don't have the need within your company or within your country, why would you be focused on the investing, right? So barring the Googles, Amazons, and Microsofts of the world, which are more on the pure play tech side, when it comes to the industrial automation or industrial software, Europe historically has been one of the top leaders. China is obviously doing well now, but otherwise Europe has been historical top leaders, which is where you look at most of the top industrial players. They come from Germany, right? Both in the manufacturing side or automation side. So in that sense, I think, in my opinion, this is a good pickup, for them to pick up this company out of Czech Republic. But we'll have to wait and see how this will play out, because they have acquired this just about 8 months back. So on the capex side, as I mentioned, EMS is the new upcoming line. Multiple lines are popping up. So a year from now, I think we'll see how it is progressing. They have plans to spend another 70-80 crores this year. Most of it will go into the EMS part, as well as some of the new products that they are launching. But more importantly, the main takeaway I would like you guys to get out of this slide is the leadership investments. In the last 6 to 8 months, the number of roles that they have created for their future growth is unbelievable. So one, they brought in a COO. So this gentleman worked at 4 or 5 EMS companies in the past, including LG. So comes with a vast EMS experience in, right from setting up an EMS plant all the way to getting into the mature state. So that's, I think, a pretty good start there for their EMS side of it. And then on the top of it, they have also added a head of quality. They have added head of solar sales. Like I said, on the solar inverters, they had pretty high ambitions, but I don't think they have made enough progress. To an extent that in the most recent con call, they didn't even talk about it at all. And I was also surprised that no one even asked the question about, hey, you had highlighted about solar inverters 4 quarters ago. Where are you? None of those conversations. So I think everybody pretty much gave up on it. But apparently not the company. So they have hired a solar sales head. Hopefully we'll see some progress this year. And then they also have a head of R&D in the electromechanical products, which is their bread and butter. So they spend good amount of chunk on the R&D. I think they have 3 or 4 R&D centers. And then they have hired one international sales person. She comes with a good amount of experience in the international sales for multiple electronic companies in the past. So it's on the same line. So we'll have to see what kind of impact she will be able to, bring in. And they have also added a procurement head in China. So like I said, in China, they have a setup where they have come to the EBITDA break even. The numbers are too small to talk about. Probably could be $1 million or 2 million here and there, maybe even lesser. So, and hence I'm not going to delve into the numbers. In fact, even management is not delving into the numbers. It's a pretty small setup. But I think what it opens up for these folks is the chain of procuring products from China if required, or growing that components in China itself, and then exporting from there. So it opens up multiple doors. Either they could import into India or they could export from China to elsewhere. Obviously, we'll have to see how tariffs will play out. But it's a good optionality to have, because today, a good chunk of these products are actually imported from China, right? In India, matter of fact. So that's kind of helps them to have a two-way street. So they have added a procurement head there. So which I'm assuming that Rishabh is quite serious about procuring the components from China, either for the purpose of importing into India or even for the purpose of importing to, exporting to other countries, right? And then they have hired 2 seasoned sales guys in the US, because US is one of their top priorities. They got multiple approvals for lots of products, because without certifications, you can't really sell in US and even in Europe for that matter. So they have added a couple of professionals there. So long story short, right? I have focus on the solar sales. I have focus in China. I have a lot more focus in US and some of the international space. And above all, I have a very meticulous planning for my EMS business, right? So could all of this succeed and turn out to be blockbuster moves? Maybe, maybe not, because nothing moves easily in the corporate space. All of us know it. But do they have intention in making a difference to the company and to grow? Absolutely yes, right? So if you have a good management and they have hunger for the growth, and they're building their leadership scale accordingly, and who have had history of doing really good acquisitions over the last couple of decades, then I think you tend to believe that, yeah, I think they've probably done the right choices and they'll make the move, right? So, okay, so let's come to the problem now. If you look at the chart, I'm hoping some of you might have done it as I was talking about this company. It had gone up to pretty high numbers after IPO, then came down all the way, touched 200, and now somewhere around 300. So basically, a bit of recovery is there. I'll tell you the story of why it went that way and then why it fell, right? In fact, this chart is pretty much self-explanatory. So you look at you ignore FY25, but you look at the previous 3 years. It's been a company that's growing at double digit, 20% growth. 20% growth is a pretty damn good company, right? Especially in the Indian equity markets. We give 40, 50 PE for a company that's growing at 10%. That kind of euphoria we keep running around. So in that sense, a futuristic sunrise company, 20% consistent growth year after year. So that is what led to the stock price reaching to those highs that we had seen a year back. And their margins were also pretty decent that time. But then what gradually happened is one division out of their Europe, Poland, the Lumel Alucast company, which does the aluminum die casting, that started coming into the trouble, right? Not because it didn't have the growth. Growth was okay, but because their margins eroded. And why the margins gone for a toss? So this Lumel Alucast had signed multiple contracts with the European EV makers. Right? Obviously, I'm assuming most of us know that aluminum became a lot more prominent in the EVs because you have to keep it lightweight. So the European EV makers have started producing these EV vehicles for many years now. One of the driving reasons besides the the demand for EV was the European Union itself had given a green revolution, right? I mean, if you guys remember, almost a decade ago, European Union was one of the first one to cut down all of these fossil fuels and move into the more sustainable greenery and all that stuff. I mean, we have heard multiple names from Europe making headlines and all. So I'm not getting into political story here, but historically, Europe has been one of those pioneers in terms of pushing for green. And hence one of the simplest rule that they had was the automakers couldn't produce more than certain number of ICE engines, right? Everything else has to be something else. So there was a mandate that came to the European automakers that, hey, look, you got to produce EVs. So naturally, multiple guys jumped into it. A couple of large customers, Lumel was able to acquire, and they started supplying to them. So that actually grew well. So which is where you see the 20% sort of a good growth. They grew well, but all those contracts were signed like 7-8 years ago, before COVID. And then the COVID hit, and what it resulted into is two major headaches for Rishabh. One, the inflation-driven wages had to be taken up because I think right after the phase 1, phase 2, the inflation had skyrocketed. People were desperate. The inflation skyrocketed in Europe a lot more than US elsewhere because in Europe, the energy crisis was there, right? The Russian-Ukraine war and everything. So all of those things happened at the, year and a half, 2 years sort of a time frame where you had the COVID-induced inflation went up, and then that inflation caught up with the energy crisis. Literally, all the electricity and everything is run on the gas, and with the Russia-Ukraine war, the gas prices went all over. We have seen all that cycle a couple of years ago. So what it resulted into is the manufacturing expense. The operating cost significantly went up for aluminum die casting because you need to consume a lot of power when you are molding the metal. But they couldn't pass on that cost to the customers. Why? Because the contracts that they had signed, the contracts had the provision for price adjustments only if the raw material price changes. For example, if the aluminum prices doubles up, then Rishabh would have had the flexibility to increase the price when they're selling it to their customers. So that provision was made. For raw materials, the provision was made to adjust the price. But energy crisis was not raw material. No, they didn't classify it that sense. I mean, now you look back in hindsight, I'll probably say energy is also my raw material, but not when they signed the contract. And because of that, the customer said, I don't care. Aluminum price is stable. Whatever if changes, I'll pay you that much extra, but I'm not really covering your energy costs. So, and because of the fixed price hard written contract, Rishabh didn't have a choice. They had to supply. They had to keep supplying. They said, okay, we'll figure out maybe a couple of more years, the energy crisis will come down, and then we'll be okay. Anyway, EV is growing, we'll make money, and all of that, assumptions, right? And then comes China. If you look at the EV sales today in Europe, European companies are nowhere. It's all China. So China's EV makers are dominating Europe. So now it's a double-edged sword. On one hand, your margins have gone for a toss because your energy cost is significantly up. On the other hand, even the demand is falling down now. So which means whatever the growth you were envisioning, which would have covered a bit of expenses at some stage, the growth has slowed down, no more growth, but the cost is still the same. So that kind of hurt really bad. If that's not good enough, the European Union had also called out, or I think they brought in a law which kind of said that salaries have to grow up with certain percentages because of the inflation adjustments. So that also became additional headache. So the employee salaries went up, the operating cost went up, demand got slowed down, and then all of this contributed to the margins completely eroding, which is what you see in FY24 and FY25. The PAT was gone to an extent that literally they were, if they had a choice, they could have probably shut down that facility. But obviously they didn't have that sort of a choice. But let's see what they were able to improve. But before we go there, by the way, so in terms of simple math, if you look at FY25 revenue, which is 720 crores, about 250-260 crores of it comes out of the die-cast business. But what was their EBITDA? Minus 3.7%. What was their adjusted EBITDA loss? 15 crores. But if you add the depreciation and if you remove that depreciation and all, the actual net loss is 25 crores. So which means by getting 257 crores out of my 720 line, I am hurting my PAT by 25 crores, which is not fun, no? So that's what the PAT negativity you see here, 20% down in FY24 and literally half down in FY25. So that's what actually happened. And you look at the EPS, which used to be in 30s, had come down to less than 6. That is a phenomenal drop, right? Now, one question that you might have is, hey, is this just because of energy and EV issues? Is there no other problem in the company? Apparently not as much. So what they have done over the last year or so is one, the employee expenses have normalized now because the inflation came under control, and we had seen, the Bank of England and some of the European banks cutting down the interest rates and all, which is kind of specifying that the interest rates have come down. I mean, the inflation has come down. But even if the inflation comes back up again tomorrow, this time it will not be as bad as what it was in 2022. So what European Union had done this time is they've become a little more smarter, learning from some of their own mistakes of how they calculated the inflation related wages. They've come up with a simple formula, and that formula is equally applicable for everybody. And hence, companies like Rishabh and all may not necessarily have an extra headache. But again, inflation coming back to that extent probably is not so much, unless, of course, we get into a third world war. And then on the Lumel Alucast, what happened, I think I've kind of explained the entire thesis any which way in detail already. But at a higher level, the Lumel company had two divisions. One division is what they do electronics, what we call Lumel SA. And then the second division is the Lumel Alucast, right? So Lumel is a company based out of Poland. They have two divisions. One does electronics, second one does aluminum casting. Within the aluminum casting, again, there are two parts. One part is the aluminum casting that they do for automakers. And then there is aluminum casting that they do for non-automakers. So the one that they're doing for non-automakers, that's doing perfectly well. There's no challenge there. Is the growth brilliantly high in FY25? Not so much, but there is no degrowth, there's no margins issue, nothing. It's stable. I think growth obviously fluctuates here and there. But the 50% of non-auto is where we had the challenge, and that's where basically we talked about. So what they're doing right now is they have negotiated with those couple of large EV makers that they were supplying to. With one of them, they had come down to adjusting the price. Basically, price increase has happened. So that kind of nullifies at least the losses part. It may not still get them into the profits on this particular line, but at least it will nullify the losses. The second one that they have done is they're terminating the contract. Basically, they're saying, I'll supply you until this end of this year. Meanwhile, please find some other supplier. So technically they can't, they couldn't have. If the customer said, no, I don't care, you still have to supply, then Rishabh is bound to supply because they have a contract. But I think the customer is also probably considerate enough. So they're saying, okay, you know what, I'll find somebody else. So in that sense, the conclusion of this Alucast business, especially the auto side of it, is by FY26, by end of this year, they'll be break even. Matter of fact, they got break even in Q4 itself. In Q4 results, if you go back and study, this one got into the 0.02 sort of EBITDA. So basically they're at the break even. So now the expectation is they'll be probably in 2-3% sort of EBITDA from this division. That itself is more than enough because they have a significant loss last year. So as long as that minus 25 crores become zero, then naturally that will automatically add up to the other lines which are growing well. So long story short, of the multiple business lines that Rishabh has, the one that was really hurting them from the last couple of years, that is getting into EBITDA break even this year. And additionally, what Rishabh is also doing is they are approaching their non-auto customers and telling them, hey, look, we have more capacities now because I'm reducing my output to the automakers. And they're trying to pursue additional products or additional volumes and all that. I don't honestly know that will result into instant story, but naturally the brand that Rishabh has, as those other customers start growing, then Rishabh will also grow. But at least what happened is they have now contained the pain. So what it could mean, now that they have contained the pain for FY26, or rather we are hoping they'll contain the pain, what it could mean is this year, their growth won't be substantially high. Why? Because 1/3 of the business that is coming to you, the growth is stagnated there. Remember that example I talked about EV makers and China, how it is dominating and hence they are not necessarily growing. So the growth from that division won't be there and hence overall the company may not show significant growth. But what is now going to happen is that EBITDA is going to significantly change because they are hitting the EBITDA neutral there for that division, and rest of the divisions they are going to grow by 15% or so. And when you add that sort of a growth and nullify the die casting to 1-2%, you are in a significant improvement on your EBITDA. Naturally, your PAT and EPS will improve. So that's the main thesis, ladies and gentlemen, right? So why did I pick this company? Is because the worst is over. Could the auto space, forget about it. Even the non-auto, could it grow faster? I don't know. They are trying, but they have other lines to cover up for now. The electronics part in India and the electronics part in the other version of the Lumer, they're doing well. They're growing at a decent pace. They are speeding up their growth in China. They are speeding up their growth in US. Obviously, compared to the 700 crore sort of a number, those are insignificant. US is probably 1-2 million, China is 1-2 million sort of a numbers, not really big numbers, but they'll keep giving you that extra numbers a little bit here and there, and over a period of next couple of years, they'll grow. And then the most important is the EMS line, which is, capacity has doubled. So as long as they're able to find a decent amount of utilization out of it, that should contribute. So those are the growth levers. But from the bottom point of view, in my opinion, unless a major escalation happens, geopolitical escalation happens, I think the bottom is done. FY26 should be significantly better than FY25 in terms of their bottom line. And then one of the key guidance element that the management had given, that they have categorically said, hey, we can generate about 100 crores of EBITDA this year, right? Which is a pretty good number. And then the simple thesis, of course, they made this statement in the most recent con call, but this is what I was calculating to about 2 quarters ago when I started tracking this company a bit more seriously. My number was somewhere around 80 to 90 sort of EBITDA. Now management is saying 100. Would they hit 100 or will it stop at 90? That I don't know. But certainly above 80 is what my bare minimum calculation is. So we'll go with management, guidance. So around 100 crores of EBITDA, it is right now available at a 10 to 11 EV by EBITDA, which to me is a pretty attractive valuation for a company that is only building more and more specialized components. So the core thesis, I think I've kind of talked about this multiple times, so I'll skip through quickly. EMS will grow. The solar space, hopefully they'll finally make progress this year, especially now that they have some sales team. They are focusing on US and China, like I said, but I'm not going to count too much on it. In terms of the percentages, yeah, those numbers look good. For example, China, they have grown by 20% FY25, but it's a small base. I mean, it doesn't really matter. US, they have grown by almost 60%, if I'm not wrong. So the percentages look fancy, but in terms of absolute numbers, they are not there yet. So they'll pick up. They'll pick up. And then one other interesting one, obviously, is SCADA. The automation and integration part with their instruments. So what this really does is all the instruments that the Rishabh is selling, those instruments, they are deployed or set up in the respective factories. And the factory need to have some Internet of Things sort of a software. They need to be able to read data from there, have their own dashboard, and see how they're performing and all of that, right? Every company does this. For example, when I was working at GlaxoSmithKline, Siemens was one of our vendors, and they had done a lot of automation for our pharma warehouse and the labs related temperature and humidity and pressure control. Now, in spite of a company like Siemens, who have had history of great stories in this industrial automation, even there we still had to struggle to integrate that into our own systems, into the GlaxoSmithKline systems. So in that way, while on one hand we talk about AI and all those advancements in the tech space, when it comes to industrial automation, it's not so simple. It's not so easy. It takes a lot of effort in automating and getting a dashboard and being able to track and all of that and keep the information at your fingertips. It's not so easy. So the integration takes a lot of pain. Most of the companies actually, they fail in integration. So that way, what is this going to do to Rishabh is now selling a forward integrated solution that, hey, look, I'm giving you all of these instruments. I will also give you the software to control and measure and monitor, and I'll help you integrate that software into your software. Integrating software to software is relatively easier versus integrating instrument into the software. So that way, I'm assuming, based on my past experience, I'm assuming that in the next couple of years, we should see a very significant forward integrated solutions coming from Rishabh to the expertise that they already have in the instruments, and merge or integrate that with the software that they have acquired from Microsys. In fact, the company itself they have acquired. So whether they will be able to grow the software onto the additional customers tomorrow as a software itself, that I don't know. Maybe they will. But the biggest advantage that Rishabh has is they can integrate this software into their own products that they're selling and offer a forward integrated solution to their customers. That I think is something that market probably has not realized yet. In my opinion, if I need to pick up one wildcard out of this, all the bullet points, it will be SCADA software. That could make wonders if Rishabh can do that integration well within their instruments and sell it as a forward integrated solution. Now, the antithesis, obviously, if tomorrow, Europe doesn't grow or inflation comes back or some of those things happen, it will hurt. So that risk is already always there, because 2/3 of their revenues, more than 2/3 of their revenues come out of Europe. And then one of the key theme for their growth in the die casting is their non-auto business need to grow. Otherwise, what will happen is they have to incur certain minimal cost. If I remember correctly, somewhere around 15 crores, something like that, I think is the minimum cost that they have to spend on the factory, on the fixed cost. So what it means is, if Rishabh doesn't grow enough of the non-auto, because auto anyway is not growing now, because China is dominating, then what will happen is their fixed cost will continue to eat away their margins. And hence that non-auto business growing in Europe is an important element for them. And of course, we talked about how many new leadership roles they have onboarded in the last 6 to 8 months, quite a few of them. Matter of fact, I won't be surprised if some of that hurts their ESOPs and employee expenses in the coming quarters. It will. But to me, that's a positive problem. It's a good problem to have, right? I would rather see employee expenses going up for a viable reason of potential growth in the future than employee expenses going up without any future prospects, right? So it's a good problem to have. But again, if they don't make enough impact, then naturally it will hurt. And of course, one of the main lever is the EMS, because of the amount of money that they've spent and the visibility that management believes they have. If that doesn't grow, then obviously it will kill, not only from the growth point of view, but even tomorrow, depreciation and those things will come and hit them, right? So those are the antithesis pointers. Having said that, the possibility of thesis playing out, in my opinion, is a lot higher than the probability of antithesis playing out, but we still need to keep that in mind. Okay, so final slide. So where it is right now, I think I already mentioned this in the previous slides. It is around 10 to 11 EV by EBITDA. If you look at FY26, the current PE is 50 plus. The current EV by EBITDA is, I think, is 17 or 18, something like that. But even if I assume 15, right, I'm going conservative here. Even if I assume 15 EV by EBITDA for next year, we are talking about 45 to 50% sort of a upside. If we assume that this is a business that will get into double-digit growth again, it will start, reversing the EPS trend. If you remember, the EPS had come down from 32 to 20s to 15s to 6, right? That typically, whenever you come across any company that has gone through an unexpected problem, right? If you take a step back and look at this company didn't get into this bottom line trouble because of their own mistakes, right? That's the difference. Most of the companies that we do, they get into the bottom line challenge because of a cyclicality in the business, or because they made some bad capital allocation, or they made some wrong decisions, so on and so forth. Whereas in this case, they didn't get into the bottom side issues because of those obvious reasons. They got into the issues because of different reasons, which were way beyond their control. And I think if in all that fairness, that probably would only made the management a lot more smarter and tougher now. Because one thing I think I remembered they saying in the con call is all the contracts that they're negotiating now, they're keeping all of these aspects in mind before they conclude, right? So it made them smarter. So that way, an unexpected problem hit them. It hurt them a lot more than some of the other companies got hurt. And now they're coming out of it. And hence, my confidence is that this company will reverse its EPS from now onwards. I'm not saying it will hit 30 EPS next year. No, that's not going to happen. But just like how it took 3 years for them to fall from the grace to all the way to the 6 EPS, it might take 3 years for them to go back there, especially with EMS and SCADA being in their bag now. So I'm making a very rudimentary estimate that EPS will go back into 30s in the next 3 years. And if it does, then you're talking about a big multi-bagger in front of your eyes. Even if it doesn't, even let's say it doesn't go to that level and you don't want to give a 50 PE, you will only give a 30 PE, whatever. There's not much to lose here. So that's my reading. Again, I could be completely wrong. Truth to be told, I bought this company at 240. I bought this company at 220. I bought this company at 200. And recently I bought this at 300 as well. So those are my transactions. I'm still building position. I'm not in a rush. I built bit of allocation. I still want to monitor over the next quarter or two how it does. If management is walking the talk, if I see EBITDA neutrality is showing up very well in Q1 and Q2, and EMS and solar inverters are growing, then I think I'll go big on this company. So that's my thesis, and that's where I stand. I think I'll spoken for too long, so let me pause.
Thank you, Shekhar. Wonderful thesis. I think you dissected really well. So, any
Puneet,
questions for you?
Puneet, I don't have a question, but I just wanted to discuss this a bit.
Yeah, please go ahead.
Yeah, Shekharji, thank you so much for the wonderful presentation and um, for highlighting. So, what I want to discuss in this is thank you for highlighting this opportunity on solar inverters. So, I worked in solar industry for 10 years, and what I realized was there are hardly anyone making solar inverters in India. Whereas today, the demand in the 2 kilowatt, 3 kilowatt rooftop solar system for household is growing at a very high rate, and still there's no one making these solar inverters. Some startups are trying. I wasn't aware that Rishabh is making it, So thank you for bringing this, opportunity to our knowledge.
Good to hear that, Saurabhji. In fact, another friend of mine was telling me that there are lots of unorganized names in the solar inverters, and hence how much Rishabh can tend into it. Maybe that's the reason why they're slow,
No,
etc.
so
But
sir,
good to hear from you.
basically, China is able to supply almost for these smaller inverters. China,
Hmm.
I think, has more than 90% market share.
Right, correct.
Even Indian companies that are selling like Polycab, they get it from China. So there are
Okay,
some startups working on it, but there's a huge opportunity. Growth rate is very high because under this government scheme where you give 30% subsidy on
correct,
households,
correct.
every lot of my relatives and friends are putting up these solar projects on their roof, but all inverters are being imported, so that's a good
Hmm.
opportunity. And since while you were making the presentation, I could go through their transcripts and search for solar. So what they've highlighted in the previous quarter, not this quarter, previous
Yeah,
quarters
100 crores.
call,
Yeah.
is that they currently are not able to match the pricing, but they're working on it to reduce the pricing. And they have hired people from inverter. So they have hired someone from SMA, and SMA was a German company. When I entered into solar in 2012, they were the
Hmm.
market leaders. And ABB also has inverters, so that's a positive development that they have hired someone with experience of selling solar inverters. So I'll be keeping a track on this, and yeah, that's I just wanted to share.
Wonderful. Thank you. In fact, that added a lot more thesis to my thinking now, because at least in my mind, I was thinking that since they haven't been able to make much progress over the last few quarters, maybe there
Hmm.
is too much of an organizer and import headaches are there. But this is good to know. In fact, I think the guidance that they had given a couple of calls back was 100 crores run rate every year. But obviously, they're
I think they can do much more. The only thing is they need to figure out their go to market strategy.
hmm.
If they go and sell to to say EPC companies that build up these projects and do all the procurement, then it may take time. But for example, if they tie up with someone like a Polycab or a Havels, uh, and those are very good brands, and
Faster
the
movers. Hmm.
acceptability is high because the EPC companies anyways buy the cables required for solar projects from Havels or Polycab, then they can quickly scale this up. Similarly, in solar projects, the government has a DCR scheme for solar modules. So all solar modules where the government gives subsidy today have to be made in India. But they have exempted inverters from this because there's no inverter manufacturer in India. So if they
Right.
can lobby with government and cover inverters also under DCR scheme, so then they can do all this 700 crore their current revenue just from solar inverters. So it will depend on how they are able
How they
to
play the game. Yeah,
sell this.
correct. Which I'm hoping they will be able to. I mean, at least they'll make good progress this year because now they have a dedicated leader to look at the solar sales. So
Correct,
hopefully we'll see some traction this year.
correct. Let's see. That's it from my side. Thank you, everyone. Thank you,
Okay.
Shekharji.
Thank you, sir.
Okay. Okay, sir. If any other questions come, I will approach you. Currently, I don't
Okay.
see the chat as well. Thank you for
Perfect.
your
Thank you,
time
Puneet.
and presentation. So we move to the next presenter, Farshad.
Yes, hi Puneet, hi everyone.
Hi.
Yeah, let me share my screen.
Yeah, you can move ahead. Good.
You can see the full screen, right, Puneet?
Yes.
Okay, great. Okay. First of all, just wanted to take 30 seconds to say that my ex-presenter, Shekhar Bhai, first of all, you did a great job. Not surprised at all. But yeah, generally, you know what, on behalf of everyone, thanks for excellent work that you and your team do to share all the research, knowledge, share your personal guidance, through your Twitter handle, etc. as well. I've had the good fortune of meeting you a couple of times in person, and what a humble and knowledgeable guy you are. So thanks for just being yourself. I really loved hearing you all the time, and especially today. So just wanted to put it out there.
Thank you, my friend. It's a pleasure.
Okay, great. So let me get into my idea of the day. So no surprises. I've already put the name of the company right up there. So I'll be discussing the theses and triggers on Carousel today. Overall, I've just made it very straightforward because it is a very straightforward and simple business. I'll be spending a very minimal time on about the company, just the evolution and the industry. But majority of my time I'll be spending on the company specific triggers and why I believe it has come to an interesting point where we can consider this to be a part of our portfolios if it gets you excited, that is. So that's basically where I'll be spending a bit of more time, and obviously I'll finish with my idea about some financial projections, some risks, some things to track off before we consider this. So yeah, let's move forward. So from a products and global presence perspective, so first products, quite a simple thing as I mentioned earlier. So at level one, the product segments that it caters to are bathroom products and kitchen products. And level two, from a bathroom perspective, it's a bath fittings, but it's more on the kitchen side. Their majority of their product portfolio, majority of their sales, revenues, etc. comes in. And even inside kitchen, sinks is pretty much driving close to 60-65% of their revenue. So that's basically the big baby for them. But apart from saying the surfaces, faucets, kitchen appliances are something that they are increasingly investing in and trying to go towards some of the adjacent businesses for cross selling. But sinks is pretty much their cash flow, and even inside sinks is the steel and cords. And the reason I've sort of did this level one, level two, level three is because all of this will come as part of one or other triggers once I reach there, because they are doing something in, for example, sinks, for example, surfaces, for example, appliances. Either it's cross selling, either it's more capex, or either it's BIS certification. So it's important for us to know that at least this is the product portfolio that Carousel plays along with, so that when I go to the trigger point, you would be able to sort of do a very good one-to-one mapping. So from a product perspective, as I mentioned earlier, it's a very simple company. I love simple companies because I find it a little difficult to keep track of complex companies, multiple LOBs, and multiple parameters, etc. So yeah, so that's why this looked exciting to me. So okay, fine. So from a product perspective, that's what they're dealing with. And just from a revenue bifurcation, as you can see, the sinks is pretty much close to 59-60% of the business as of FY25. Appliances. Is appliances is 14%, the smallest part of their business now, and kitchen surfaces, which is an extension of sinks, I would say, but they sort of classify it separately, is another 28%. And from a global presence perspective, and again, as you can see, the domestic side of things is pretty much at 18% today. So majority, they are an exports player, and even in under that exports player, they are a strictly B2B player. So it's only in India where they are a mix of B2B to B2C, and that's where one of the triggers is as well, once I go into the trigger section, as to how they are planning to expand it, and what will sort of drive their revenues in. But overall, the message is simple business, mostly sinks and related surfaces, and mostly an export player as of now, more than 80% of their business, and more B2B rather than B2C. So this is in a gist what Carousel is all about. And what I also wanted to do was spend a little bit of time on the company evolution, and I've highlighted some important developments, because all of this will eventually be something that I'll be talking about in the trigger section as well. So very quickly to start with, it started as a company in collaboration with Schock and Company, which is a German company, absolute leader in sinks manufacturing globally. So they are the ones who came up with what we call the quartz technology, the quartz material, how to convert that into an actual usable sink, and they have actually patented it, and it's only given to four licensed manufacturers across the world, including Shaw and including Carysil. And that's what is one of the moats about Carysil as well, that it's the only listed player, not only in India, but throughout Asia as well, to have this technology, the best possible technology for a quad sink. And I'll explain you as we move forward what's the importance of quad sink, how it is growing with respect to the traditional sinks, and why Carousel is more focused here, etc. as well. But the message here is that its DNA is high innovation, high technology, partnership with the innovator. I mean, I can sort of give you an example from the pharma world, right? I mean, the CDMOs who work directly, with the innovator companies and, sort of co-develop it and get, exclusive licenses. Those are the ones who are, regarded the best in class, the best in industry, wins the biggest contracts, etc. And that's exactly what's happening in the world of sinks as well with Carousel. But we'll get there, once we move on. So yeah, I mean, that's how they started. And then, by 2004, they were still, 100% export oriented. Then they started establishing subsidiaries in Germany, US, and UK as well, to expand to, and expand and cater to different countries, especially in Europe and Southeast Asia, and as well as US as well. And then probably around 2015, 16, 17, around that time, they started focusing a bit more on India as well. And that's where they put up few experience centers, galleries, showrooms in India. But again, very strictly B2B still at that point, not majorly B2C. And then moving around, 2019, 20 points, that's when they started getting, very, very big contract manufacturing orders on behalf of giants like IKEA, like Karan, like Bowdens in UK, etc. as well, because it takes a bit of time for any company to sort of showcase that yes, we have done this, for decades. We have the best in class product, we have the best in class facilities, we can scale up very fast, etc. as well. So that's why you would see, if you observe their financials from 2020 onwards, 1920, they started receiving these big orders, and they started investing them into the capex as well, to invest more into, very specific facilities, for example, for the likes of IKEA as well. So their fixed assets, just a quick look at Skinner, you'll observe from FY22 to FY25, it has grown to almost 2 to 2.5 times, and they're investing more. So, by end of this year, maybe it will become 3 times as well. So obviously, that took a hit on their financials, a bit of, the debt to equity went up, the cash flows sort of, dried up a little bit. Also because of, a bit of high inflation, in US and Europe regions as well, which impacted the consumption side of things, because at the end of the day, this is a consumption play. But having done all of that, it has come to a stage where a lot of factors are coming together for it to sort of hit that, I wouldn't say a hockey stick type of growth, but a really good inflection point where things are looking very positive. And why is that, is pretty much the topic of the discussion today. But I wanted to spend a little bit of time on the company evolution and some of the things about it. But before I move on to triggers, just one point about the industry drivers as well. But there are definitely some industry drivers which are driving these things, and very quickly, increasing household formations and urbanization. I mean, at the end of the day, sinks is, especially cot sinks, is a premium product. Steel sinks, it's still a mass product. But whether it's steel sinks, cot sinks, the kitchen appliances, the surfaces, the faucets, increasing household formations, increasing urbanization is a direct it's directly related to, the increasing sales of this company. Rising disposable incomes, definitely, as the per capita of the Western world, of Indian world, it develops more. People are more willing to invest in, renovating their homes and, upgrading their homes, and, moving away from steel stinks to cord stinks because of better quality, longer durability, etc. as well. So that again is a factor. Home renovation and remodeling. So it's not only new homes, but also whenever we go for renovation and remodeling, as and when, we get a bit richer, we have more money in hand, we upgrade our kitchens, we make sure that the aesthetics look good, etc. as well. So that is also one of the factors. Growth in hospitality, I mean, we are seeing the number of restaurants, the number of hotels that are coming up, and all of this, whether it's from a bathroom perspective or from a kitchen perspective, they only invest in high class, very very valued brands such as Carysil as well. Lifestyle changes, especially post COVID, one of the things that management has also highlighted, that a lot of people want to sort of stay in, and from a health perspective, they want to go for their own cooking preference, etc., which means that they would want to have the best possible kitchen for themselves, with the best equipment, with the best functional kitchens as well. Technological advancements, I mean, for a long long time, the majority or the winner in the sinks world was still sinks, steel sinks, because cheaper, very easy to install, and it was pretty much a standard as well. But again, the move from steel to quartz, the touchless technology, better water availability in a lot of parts of world, etc. as well, is sort of pushing people to experiment in having these fancy sinks, fancy surfaces, faucets, etc. as well. Material innovation, I'll probably talk a little less here because I've got a dedicated slide, but quartz is something that more people are going for, it a higher margin, higher value product, and why is that is something I'll talk about. And finally, e-commerce growth, etc. as well, because this gives the consumers options to look for what's there in the market, what's best for me, instead of just going to a showroom and the sales guy just telling you sort of just go for this sink or this faucet, that faucet, this kitchen appliances, etc. I mean, the online presence of all these products just helps you analyze things for yourself as well. So these were some of the industry drivers that, I mean, based on my own research, etc. as well, but also was mentioned by their management as well in quite a bit of the con calls. Okay, so that was pretty much it. Very very high level summary of industry and Carousel. So as I promised, I'll be spending most of my time on the triggers. So there are very, very six clear triggers here, which I believe has brought Carousel to an inflection point where we can consider, if it's an investment grade opportunity or not. So what I'll do is I'll go through one by one, so that I give you a good perspective of what's happening on each of these dimensions. So let's go through it. So the first one is around the increasing geographical coverage. So there are two aspects. One is international and one is domestic. From an international perspective, it already exports to 55 plus countries as of now, but they are expanding into new geographies, especially the Southeast Asia, the Australia and New Zealand as well. And according to management, they are seeing very strong product acceptance and inquiries. Now, one of the advantages for Carousel here is that as I mentioned earlier, for their quad sinks, which is their biggest product, there are only 4 licensed people, or rather companies with that technology throughout the globe, and all of them are in Germany except for Carousel. So Carousel has a natural advantage on the eastern side of the world, to sort of have a ready-made access to the market, and just go for it. So that basically is the advantage, especially when you think about the type of geographies that they are trying to expand. They're already very strongly present in UK and EU markets. It's a very stable and mature market. It's not a type of market like India where things are growing 30% plus, etc. It's like more of an 8 to 10% market, but it is quite a considerable portion of their business right now, and they're trying to sort of move that needle lesser from UK and EU, more from US and India as well. But it's a stable and mature market. US, definitely, as I was mentioning earlier, because of high inflation rate, high interest rates, it definitely took a hit on the overall housing market, the consumption patterns in US as well. So especially if you observe in the last 2 3 years, their financials, the export numbers, the growth didn't really look exciting. But again, there is a decent bit of recovery demand coming in the US market, and that is also true because if the demand is coming in, big folks like IKEA, big folks like other US retailers like Karan, they are giving big orders to Carousel, especially in the last few quarters. So this is pretty much true that there is a recovery coming in in the US housing market, and also they have a US subsidiary which they are expecting to turn profitable in FY26. And one of the expected questions that I predicted was hey, what about the tariffs as well, right? So as of now, there is no reciprocal duty on sinks. It might come in once all of the tariff discussions finalizes. So and according to management, it's only the steel sink side of business which might see a bit of tariff. The quartz wasn't included even in the first round of tariffs, and the steel side of business in US is in single digits. I don't remember the exact number top of my head, but it was pretty much 3% or 4% of their entire revenues. And according to management, they're saying that in case the tariff comes on steel sinks, it's actually will turn favorable for us, because then they will start moving away from sinks to quartz even at a faster rate, which is a higher margin product for us. So overall, they didn't sort of really seem bothered about the tariff on their products as well. Now, from an international perspective, one of the important investment areas for them has been Gulf, especially the UAE region, and the growth has been phenomenal, 60% plus. Obviously, it doesn't show in the numbers because as a percentage of the overall business, it's quite low. But they have doubled down on the Gulf region. They have opened a very very big second showroom apart from Dubai in Sharjah very recently, and again again this on the B2B side, Emaar is the biggest developer in the region here, not only in UAE, but it has projects going on in the entire Gulf region, and they have had a recent breakthrough. They have signed a memorandum of understanding for buying Carysil sinks only for their premium and mid premium projects. And guys, I'm actually based in Dubai, so I know that if you strike a deal with Emaar, I mean, what sort of prestige, what sort of credibility, and what sort of big orders that they will get in the near term in the next 1 to 3 years. I can sort of say that just based on my personal experience. But yeah, so this is a bit on the increasing geographical coverage from an international perspective. But overall, as I mentioned earlier, already a strong exports player, 80% of their business coming in from international stuff. They are only going to get better here. But the real story, guys, if I may, is more on the domestic side. So one, it's only roughly say 20% of the business, and so far historically, they have been more of a B2B player. Now, what they're saying is that we want to move ourselves from a B2B to a B2C player. We want to sort of control the market for our products here. So as you can see, whether it's from a dealer perspective, from a distributor network perspective, just the numbers from FY21 to FY25, I mean, dealers have tripled, distributors have increased, the number of galleries that they have invested in, the experience centers, the showrooms have increased quite a bit. And the reason is very simple. Compared to the international business, the domestic business is growing super fast. And again, in India, very recently, rate cuts have happened. The inflation rates are, being in control, the rising incomes, and people are generally, moving from mass products to mid premium and premium products, which Carousel plays in as well. And this is where their next big bet is. They are expecting that currently we are sort of 20%, 25% of the business right now. We want to make it 50-50, maximum in the next few years as well. They didn't give an exact timeline, but that's where their target is. And again, very similar to how Shekhar bhai sort of mentioned in Rishabh's presentation, once a company is sure about the growth, they hire the leadership in that aspect, and that's what Shekhar bhai highlighted, right? So here as well in Carousel, because they are very sure about the next leg of growth coming from the domestic piece, they highlighted a B2B business head for the entire Indian region, a dedicated person for one of their products, and for the entire South zone as well, very experienced folks as well. So this is pretty much the first trigger point that will take them to the next level, and why they are at a changing point. So the second one is around company modes, probably according to me most important one, because this will not only drive the near term, but also, will pretty much stay with the company forever. So there are four company modes, guys, if you sort of, ask me. So one is technical superiority, as I already told. I mean, the Shock technology, Shock is the name of the company, by the way. It's a, quartz sink manufacturer, and they are the ones who invented this technology, the best in class sinks with, the longest durability, the best in class finishes, etc. as well. Very, very highly regarded. And they patented this and they licensed this only to three others, two in Germany, as I mentioned earlier, and one in rest of the world, which is Carysil, but only company in India, only company in Asia with this technology and know-how. So that is number one. Customer stickiness. So typically, how molds are manufactured is, or rather, sinks are manufactured, is that there needs to be a mold in which the right material is poured into and then left to solidify and then do changes, etc. as well. So supposedly, I mean, obviously I'm not an industry expert, but supposedly it takes anywhere between 1 to 2 years to develop a mold. Probably for steel sinks is a little less, but for quartz sink is probably towards a 2 year period, and it's done in collaboration with the specific client for the specific market for a specific model. And once it's made, the lifeline goes on for 15 years. So that is also probably one of the reasons, I can't confirm why, all the IKEA contracts, the Karan contracts, the Boden contracts, etc. All of these are big retailers, guys, just the names that I'm taking, goes on for 10 to 15 years because the mold is made for them. And the customers supposedly also invest in developing these mold at their site. And then Carousel imports these molds and fixes them into their factory and then manufactures it. So it becomes a very painful process even for these big retailers and big dealers and big B2B customers to change your sink sort of manufacturer, because it just takes 1 to 2 years to for the mold to happen. And then you have to go through all the quality checks, the entire execution of it as well. And just to give credit to Carousel, I mean, they have the highest number of customized molds which they have in the industry because of multiple decades that they have spent. And it becomes very easy for them to just showcase these historical molds that they have, the designs as well, to new clients, and just showcases their expertise and leadership. And it just is a big trigger for attracting new clients as well, and obviously keeping the clients with them as well. Cost advantage, very, very big. I mean, it's the lowest cost manufacturer, and I was just doing a research. So there were different numbers, but the cost advantage compared to other players in the market is between 20% to 50%, depending on size and model as well. But again, obviously, manufacturing in India is lower labor cost and lower overall total cost of production as well. And as I mentioned earlier, their global competitors are in Germany. So you can imagine whether it's power cost, labor cost, land cost, etc. There is absolutely no comparison. So that's why I'll be talking about the IKEA contract ahead as well. I mean, but the thing is, IKEA for their sinks globally, they were giving 25% of their business to Carousel. Now, because of their latest contract, that number is going to go to 75%. So 75% of global IKEA sinks is going to come from Carousel. Why would IKEA take such a big risk? Because one, obviously the quality is there, but they are giving them 20 to 50% cheaper than their other German counterparts. So again, talks about their credibility, their standing in the industry, and the advantages that they're bringing in as well. And these guys, finally, the one of the modes is, I mean, obviously they have got a patented licensed technology from Shock as well, but they also invest quite a bit in their own R&D as well. So mostly it's on the quartz side that the license technology is there, but on the steel sink side, they are the first player globally to develop this physical vapor deposition technology. Because one of the challenges with steel sinks is that you get stain marks on it quite a bit, and the damages, the scratches, the dents are much more susceptible to happen in steel versus quartz sinks. But because of this latest technology, the PVD technology, supposedly a good layer of some chemicals are applied on the steel sinks to make sure that the shine, the strength, and the scratchability of the surface goes down as well. And all of those things happen. And the thickness also increases above the standard, because better sturdiness, higher quality, etc. as well. So these are, some of the company modes as to, why Carousel stands a bit ahead of its peers. I mean, globally there are no peers. Sorry, locally there are no peers, but globally as well, why it stands apart a bit as well. Now, the next one is about increasing demand for higher value product. Okay, so sinks is pretty much sinks and related is pretty much 80% of their product portfolio as of. So mostly it's steel sinks and quartz sinks that a big value change is happening today. So the trend, as I mentioned, in the commentary below, is from steel sinks to quartz sinks because one, there is a huge market potential for quartz. Currently, there are only four players, as I mentioned earlier as well, and 80 to 85% make use of stainless steel right now, and only 8 to 10% make use of quartz zinc. So the runway for quartz zincs, which is a higher margin product, higher asset turnover product, and longevity of asset molds as well, is much bigger compared to the stainless steel sinks as well. And again, the market has tripled almost for quartz sinks in the last 10 years. It's growing by 20 to 25%. So that is basically the area to be in. And the good news is that even in the sync side of business for Carousel, almost like overall, it contributes to 48%. So just imagine, I mean, if you have a portfolio of stocks and your biggest allocation is growing at the fastest rate, and it's giving you majority of the return, the overall portfolio sort of gets that big boost rather than the smallest player in your portfolio grows at the fastest rate. I mean, it doesn't impact much. So that is exactly what's happening here. But very quickly, I don't want to sort of go into the expertise of steel versus quartz sinks, etc. as well, because I'll be sharing this report with Puneet, and Puneet is going to share it with everyone. I thought I'll just include a slide so that whenever later you guys want to go on and understand what really is the difference between stainless steel and quartz sinks, these are all the things that I've compared against, whether it's durability, resistance, noise, aesthetics. Definitely quartz score more. Maintenance, again, it's better for quartz. Cost and installation wise, steel is obviously easier and quicker to do it. Competitive intensity, quite a bit for steel, and very, very less for quartz. And typical use cases, again, for quartz side is more around the hotels, premium housing segments, mid premium housing segments, etc., whereas stainless steel is more towards the mass consumption side of things. But I won't go into the details here as well, but it's more of a reference for whosoever want to go through later on. So that was a big around the increasing demand for higher value products. Very importantly, big orders for contract manufacturing. So most of the export orders, the B2B, the 80% of the business is done through contract manufacturing. So what you see here, guys, are some of the names, not all the clients, but some of the marquee clients that Carousel has for their sinks, both for steel sinks and as well as for quartz sinks. And additionally, new contracts are done with big guys in Australia and UK. They already have presence here as well. But what I wanted to do was I went through their con calls, etc. as well. And what I did was I just captured some of the comments, because it's very important even for you guys to just listen to what the management is saying, right? So just observe the highlighted yellow ones. So what they're saying is that a significant pattern in the industry, particularly in export markets, is contract manufacturing for MNCs, and companies like IKEA, Menards, Home Depot, etc. They are leveraging the low cost and the technical know-how from Carousel. So that is number one. And then another comment was, a very, very big contract has come in from their existing customer, Karen, who is a big US home retailer. They have entered into a 150,000 quad sinks annually across their 1,800 stores. And this is 10 to 15-year contract. So it's going to go on for a really long time. And based on this, obviously, they will win other US customers as well. And additionally, our key European customers has increased its order volume. So that is okay. Landmark agreement with Howdens as well, the largest kitchen manufacturer in UK. IKEA wise, again, already commenced their supplies to IKEA. And I was mentioning earlier as well. So earlier, Carousel used to own 25% of the sinks business for IKEA. Now, after this contract, the latest contract, so currently it's in the final stages where IKEA has come in, doing some quality checks at their facilities, but they have awarded the RFQ, by the way. So it's literally at that stage. But once it starts delivering to IKEA from Q1 or Q2, the IKEA global sinks business, 75% of it will go to Carysil now. Now, just imagine, I mean, what big sort of credibility and a reference point and a credential will Carousel have? They will take this and go everywhere for the most bigger retailers, wholesalers, and just say that IKEA 75% of their business they are trusting us. I mean, what better example of being best in the industry there can be, right? So that was that. And again, with respect to tariff, I've already mentioned it, so I won't go there. And guys, the last comment, the absolute last comment, right? You have to observe here, and still we have a lot of news, as I said earlier, mentioned before, there is calmness before the storm. So obviously the analyst, asked him to expand on this comment. So what they are saying is that the type of orders that you saw here, whether it's from Karen and IKEA, it's just the start. We are actually in discussions for at least 10 such big orders. They obviously they said that it won't come immediately. Few might come next year, few might come, FY27, FY28 as well. But we are confident that we'll convert a good, very high percentage of those discussions into orders, right? And so yeah, I mean, contract manufacturing, as I mentioned earlier. And just to give you a perspective, guys, IKEA currently is overall IKEA contract. The current IKEA contract is overall 10% of Carousel's current revenue. Now they are going to triple it, which basically means that 20% of Carousel's extra revenue in the upcoming years is going to come in just by this increased contract from IKEA. Now just imagine if they are saying that out of those 10, at least more 2 3 4 contracts, similar contracts, if they're going to win in, I mean, what will be the sort of volumes that they will be getting, etc. as well. So that's why the management used these words. This is a calmness before the storm based on the discussions that we are having. So yeah, this is the contract manufacturing side of things. Obviously, because of all of these good things as well, they are doing capex, they are going to increase utilization as well, because otherwise how are they going to cater to all of these increase in demand as well, right? So let's have a look at what they're doing there. So what you see here, guys, is what is the current capacity, what's the incremental that they are adding, and what's the new capacity across the type of big product portfolios that they have. So cots, sinks, as you can see, kitchen appliances, they used to outsource it, not manufacture themselves. So this is going to be a new manufacturing vertical for them, not a business vertical. They already had it, but they used to outsource. So they're going to put up a absolutely new plant in Bhavnagar, Gujarat, if I remember right, for kitchen appliances and for faucets as well, which is a very, very important product for them growing as well. They are almost, doubling, tripling their capacity as well. But the good message here is, for all of their products, they are increasing their capacity, and all of this is going to come in FY26, some in Q1, some in Q2, some in Q3, and some in Q4. So we should be seeing a gradual uptick in increase in volumes of units sold of sinks, kitchen appliances, faucets, say not from 27, 28, from 26 as well. And some of the comments on the right hand side, guys, again, the bullishness that the management is seeing, right? That the capacity utilization is 67% for cot sinks. And the biggest challenge for them is how do we take it to 85% to 90% within 1 quarter, because our customers are demanding the product that much. So they are saying that our challenge is not demand, our challenge is not orders, our challenge is increasing our capacity so fast, because that's the way that the demand has come in. That's the way that these IKEA orders, Karan orders, Howden orders have come in as well. So execution is what they're highlighting as challenge, and not on the demand side as well. And these kitchen appliances, these faucets are more for the local consumption, the domestic side of things as well. And that's where they have, apart from this, they have also come up with a fabrication facility in Delhi, and they're only also planning 2 centers. So apart from what you see here as well, so capex and increasing utilization, that was the fifth trigger. And finally, probably I would say this is an optionality as of now, because still the majority of the business is going to come from sinks, and especially cot sinks, because that's where the big orders have come in. But the management of Carousel definitely wants to broaden their portfolio, not go into an entirely different new business vertical, but at least, have optionality to, if the market is going bad for sinks, do they have, something else as well? So currently, the other products is, pretty much bare minimum 20% of their own business, and that's where they are investing a bit into the kitchen appliances and as well as the bathroom one. So let's first go through, the kitchen appliances one. Now, as I mentioned earlier, they're going to come up with a absolutely new facility for manufacturing these things by themselves. 1 lakh units in Gujarat, and it will be operational in FY26 as well. But one factor which gave them the confidence to go ahead and do this is the BIS certification. So according to the management, it will wipe off the unorganized sector right now, which is huge in India, and it will also stop a lot of Chinese and South Asian imports, because those players are not getting BIS certification, very, very easily. So the unorganized sector, and from an import perspective, the Chinese and South Asian competition, because of this BIS certification, the management is very confident that there is a market that has opened up for them. And guys, I mean, just think, for a lot of years they didn't invest in it, they were just outsourcing it, white labeling their product. How much confidence they must have gotten out of these developments and discussions with retailers, distributors, that they are going ahead and for the first time in their history, they are establishing manufacturing facility by themselves. So that is exactly why one of the reasons is they are doing it. And also, they have acquired a facility in UK as well. So it's not domestic, but UK, which is a kitchen product distribution company, and it has key alliances, in US, Israel, Denmark, Germany. It's more for getting access to those markets as well. And the other one, is around the bath segment. And again, it's mostly the subsidiaries in UK and US. And Carysil, according to Carysil, they did these acquisitions to get more of one, their markets, and also their technologies as well. So for Carysil Surfaces UK, I mean, it has a long list of high street names, and Carysil was very, very straightforward. We want to get access to your customers base, so we are coming in and we are buying you. Thank you. And for United Granite, they have a kitchen top manufacturing, the hard surfaces, basically the surfaces which are next to your sinks. So United Granite has a very top technology for both quartz and ceramic slabs, and they bought United Granite is exactly for that technology, so that one, they get an entry point into US, they can attach their sinks along with these slabs and hard surfaces, the workstations, and sell it together as well. But they are going to cross sell both the kitchen appliances as well as bathroom fittings as well. And again, very, very few comments that I've picked up from the management commentary is that we have comments that in-house assembly and manufacturing of kitchen appliances. I've already mentioned that. New factory for built-in appliances, absolutely yes. Over last few years, the kitchen faucet business has grown by 40%, and we expect a big growth. That's why they have almost tripled their capacity from 35,000 to almost 1 lakh now in faucets, and that's going to come in FY26. And finally, as I was mentioning earlier, the countertop fabrication facility in Delhi, they have sort of just opened it, and they are thinking of doing another 2 centers in FY26, but they haven't given a confirmation. They are just thinking around it. But this is more around, apart from sinks and related surfaces, they are going into adjacent businesses, which supposedly is either same margin or higher margin, and it's giving them great growth, especially domestically. So guys, that was it from a triggers perspective. So if I can very quickly summarize, so that, let me go back. Yes. So if I can very quickly summarize, we saw the increasing geographical coverage, both from an international and domestic perspective. But the key point was increasing investment into domestic side of things and becoming a B2C player. That was the important point. Company modes we went through, especially being only one among the 4 globally caught sync patented technology holders, and as well as the lowest cost manufacturer, and investment into the steel sink side of business, where they are coming up with innovation. That is few of the company modes, and as well as the molds that they have, which takes 1 to 2 years just to manufacture. So that was few of the company modes. Increasing demand for higher value products, we went through the move from steel sinks to quartz sinks, and how the cord sinks is higher value, higher turnover, higher margin, etc. Big orders, we went through IKEA, Karen, and the type of orders that they have got and the type of potential that they see in future as well. CapEx and increasing utilization, again, sinks, appliances, new factories, faucets tripling their capacity. We went through that bit as well. And finally, the cross-selling of higher margin, both on the kitchen appliances side and as well as, the bathroom segment sides. So I believe, guys, these are, the triggers as a combination of all of this is why I believe personally that Carousel has come to an inflection point right now, because if you open screener and look at their recent history, you won't really get excited. But investment is done for what's going to come and not exactly what has happened recently. And what has happened recently, as I mentioned earlier, the consumption was a bit down in the markets that they were playing, which was mostly the export market, higher interest rate, lower consumption, etc. as well. Those factors are slow. I wouldn't say they have completely gone off, but they're improving. And again, the biggest proof point of that is the US guys, the UK guys give them a big order. So I believe it has come to a very interesting point where I believe it has become a bit of investment grade opportunity. So how does it translate to numbers? So let me go to my financial projections. Okay. So these are my financial projections. I believe it's a 2 to 3 year story at least, because big orders have come in, and FY26 will be the year where all the capex will start coming online. So from a revenue growth perspective, I've taken a standard 20% growth across. EBITDA margin, from 18 to 20% gradual increase, and I'm going to sort of give you the management commentary around these ones as well. And similarly from there, the income, depreciation, interest as well. I mean, all of these are the standard accounting items, but we do believe that the PAT growth percentage has a significant potential to show anywhere between mid 30s to mid 40s over the next 3 years. But more importantly, I mean, guys, these are numbers. I did the Interact presentation last time as well, and my comment when I put a similar slide was, this is the most unimportant slide because everyone can do this, right? But it's more important to understand why these numbers are coming in, and that's why I spent a lot of time in the earlier slide. But I also wanted to spend time on what is exactly management saying with respect to the margin guidance, the revenue guidance as well. So earlier in FY24 and FY25, the margins were impacted a bit because of higher raw material price and higher freight costs because of Red Sea issues, additional manpower costs because they were building capacities, hire people, marketing spend because, as I mentioned earlier, when you move from B2B to B2C, obviously a lot of marketing spend needs to happen for domestic business. Now, their comment on the margin was, it has cooled down. We have invested whatever we had to invest from that perspective. So what you see as margins in Q4, that's basically our bottom margin, which was around 17 to 18%, and it will improve significantly than previous quarters. And what is that significant one is, we'll have margins from 18 to 20%. So that's why I took a gradual ramp up in the next 3 years, 18%, 19%, and 20%. So that's how I've taken it as assumed it. Another reason that they gave us was that all these deals, the big contracts that we have with the US major, with the Karan deal, the IKEA deal as well, the price per realization is higher than, our previous historical prices. So that will also drive, the higher margins as well. So that is, one of the things. From a revenue guidance perspective, so they were conservative. They were like, listen, I mean, we have potential to do anywhere between 900 to 1,000, 900 being super conservative, 1,000 being realistic. But, take 950 as a number is, what they sort of, roughly told. But, their comment was, we have potential to reach 1,000 crores in FY26. We are just increasing our production capacity right now. So sometimes a month or so plus minus, a quarter so plus minus, things might impact, but we have the potential. So in FY26, anywhere between 900 to 1,000 is what they're saying. And then moving forward from there, they are very conservative, 20%, but I think they might end up doing a bit more, assuming no big global events happen, because majority of their contracts are global in nature. So that's why, let me go back here. So the annual revenue growth, I've taken 20%, and FY26 they gave a range of 900 to 1,000. I took probably on the upper side of things, but I think it's not too far off as well. EBITDA margin, as I told you, 18, 19, 20, that's how I ramped up. These two are the most important ones. And this is how you see, the growth of the company from my perspective. So how does it look like from an investment perspective is what it is, right? Because I believe there's a 3-year story, so that's why I extended this projections and extrapolation until FY28. So the current market cap is 2653, current PP is 41.6, and we already have done a calculation of what FY28 PAT will be. So if we give an exit P between 20, 30 and 40, I mean, you can see the numbers. This is what the CAGR returns and absolute returns might come in. Now, you might say, optically expensive P 41.6, etc. But it always is the case, once the company is at inflection point, the market is always forward looking. And that's why, on the next slide, I'll show you, the type of buying volumes have come in. But I believe it's not super expensive as well. It's a reasonable valuation because if you look at home material companies, just go and check on Screener the valuations given to Kajaria, Sera, and tile companies, which are, home improvement companies as well. 35, 45, 55, that's a type of P that's given. You go to the B2C side of things, appliances, depending on growth rates, etc., anywhere between 30 to 60 P. So that's, basically how the market is looking at similar type of companies. That's not exactly a strictly, like to like peer in the industry, but home material appliances company is something that, you can look at. Now, from a technical perspective, I believe, again, a very interesting point. So, last few years, because of the issues that I've highlighted, went through a bit of dip, but very recently it has again taken a pick, right? You can see the continuous high buying volumes in the last 10 weeks. I mean, the market is forward looking. The Q3 call happened, the Q4 call happened. They saw the big orders from IKEA coming in. They saw the margin improvement, and they saw the facility announcement, capex announcement. As I told you, market is forward looking, and it has already started rewarding. I believe it has still not gone out of such a big range that we cannot consider it. The next support is around 740. I started building the position around 800, 850. I think that's the range that I've bought a couple of tranches there. The next resistance is around the all-time high, which is 1050. And also one of the pointers that I always look at is also relative strength versus Nifty. And I believe whether it was Mark Minervini or someone, I don't remember, my memory is bad, but one of the big successful trading gurus have said that one of the good indicators of a company turning positive is the relative strength versus index. Especially a good buying point is when it moves from the red zone to green zone. Obviously, it might happen that it might still fall back into the red zone, but at least it's one of the positives there as well. So I think from a technical perspective as well, the high volumes gives me a bit of confidence that yes, it's getting noticed by the market, and generally more often than not the market is right, so they are looking at the orders, the capex, etc. as well. Sorry, and finally, the risk. I mean, definitely the biggest risk, the absolute biggest risk is right at the top. I mean, 80% of their business is global, guys. Okay. So negative geopolitical events, right? I mean, it has already impacted, when this Red Sea shipping issue happened, etc. as well. So I'm praying that, more negative geopolitical events doesn't happen because it will impact shipping costs, the deliveries, the timelines, the execution, etc. as well. Uh, but I'm also confident of one thing, even if such geopolitical events have, because these contracts from IKEA, Karan, etc., long dated in nature, if it doesn't happen in FY26, it might move to 27. If it doesn't happen to 27, it might move to FY28, but it won't sort of, be a permanent damage on the company. But yes, in the short to medium term, this might have a impact on how the company will show the volumes of sales, etc. as well. And similarly, the global economic slowdown. I mean, if the inflation again shoots up, it will obviously impact the buying power of the end customers as well. So that will have an impact. Raw material prices we have already seen in the last 2 years. Because of that, the margin impact was there a bit. Now, one of the questions might come in is that how do Carysil price their contract? So typically it's a 10 to 15-year contract, and prices are fixed for every 6 months. So within every year, within 15 years, it's for a block of 6 months each is how pricing is fixed. So for example, say, I mean, the raw material prices or shipping costs, increase, quite a bit in a period of 6 months, Carousel cannot do anything. But at the end of those 6 months, it sits down with the customer and reevaluates. And according to Carousel, the customers obviously has a long-term relationship, etc. as well. They typically, then share a bit of that increase as well. But for a period of 1 to 2 quarters, Carousel, faces the heat, but it sort of covers that up with a lag because there is a 6 month period only after that, it gets in. So just that comment as well. CapEx optionalization, they are claiming that, Q1, Q2, Q3, Q4, every quarter you will see, some or other capex, whether it's for sinks, whether it's for appliances, whether it's for faucets, it should come online. So obviously, if you go about the execution of that capex slower, then the realization of the revenues, etc., will also come a little lower. And then finally, don't think it's a big risk, the acquisition synergies, because the UK, US subsidiaries are very small, and they bought it more to get access to the markets, access to their customers, and a bit of cross selling. But they are saying that currently they are in a stage where these subsidiaries are turning EBITDA positive, PAT positive, so they have got a huge runway of growth, but it's not a very, very big contributor as of now. So I don't think it's the biggest of risk, but yes, it might have a bit of impact, maybe a few basis points on margins, etc. as well. So these were some of the risks that I could see from my side. And finally, summary key messages: growing industry, the product is move towards high value sinks, players, only 4 global players with the technical capability for their biggest product, not for all the products, for their biggest products. Carousel is definitely lowest cost, innovation driven, and it's going towards a diversified portfolio. From a trigger perspective, capex, increasing utilization, big orders as we discussed, cross selling, more products as we discussed, transformation to B2C, especially in domestic. And I believe that if they execute very well, become a B2C good player in domestic, re-rating will definitely happen, because B2C domestic success stories are given, sorry to use the word, stupid multiples. So I hope Carousel also gets stupid multiples sometimes. And then finally, returns. Again, reasonable valuations. And, I think short to medium term, I don't think it's a 1 year story. I think it's anywhere between a 1 to 3 year story. So short to medium term, I believe it has potential to deliver solid returns. So yeah, guys, that's pretty much about me. Thanks a lot. And before we open up for questions, just one thing, and this comment is for Puneet Bhai actually. So first of all, thanks for the opportunity, Puneet Bhai. And once I presented, last year on Interact, I actually showcased that to one of my friends, and I encouraged him a lot. I won't take the name. I encouraged him a lot to come onto this platform, make use of this great opportunity that you're giving to the Aam Aadmi, the normal retail investors, to come and showcase their thesis. And I'm so happy to say that my friend took that up, and he's actually one of the presenters. So thank you for creating this platform, and for everyone else who haven't had the chance to present, go for it. What ALD did for me was increase my confidence. Maybe I was right, I was not right all the times, but it just gave me the confidence that I can do a little bit better. There was very much good acknowledgement by my peers as well. Take this platform, because I don't think there is any other platform like this. So take this up, push yourself. You'll end up, definitely studying one of the companies very well. And I'm happy that my friend took up that opportunity. So yeah, I just wanted to finish with that. Thanks, Puneet Bhai, for creating this. And I hope, at least for Carousel, you guys could understand, why it's a decent company to at least consider. So yeah, I'm done. Thank you.
Wonderful, Prashad. Just like the last time, you just grabbed the stage, I would say. Wonderful. So thanks for all the appreciation also and the kind words. But this ALD is a success because of all of you, not me. I just was an enabler, and you guys are putting that effort. But as you said, once you put the effort, you will understand what it requires in the background and how it can increase the conviction. And definitely, the whole job in the last 2-3 years is to make the conviction stronger for the retail, and I think it's working possibly. Thank you. So, any questions for Prashad? So, one question I think from Shekhar sir and also from my side also. So, management is always bit more aggressive in talks, but while walking the talk, they are not there. So, I am also personally tracking this company from quite long time, and they have been these targets, 1,000 crores, 500 crores, like that, from quite number of years. If you go back 12 years back, 10 years back, they were into the same tone. And of course, we cannot deny macro events, which can derail the progress also, right, by 1 or 2 years. And more or less management is definitely, I think, hitting those numbers maybe 2 years down the line, 3 years down the line, but they're doing it. Only problem which I see and what Shekhar sir is also bringing is they are more bullish than what they can do actually. So what is your take on this?
Well, I think yes, as I told you guys, right? I mean, they have to showcase that by actual execution. I believe I wouldn't have gone for building my position here if not for those 2 or 3 big orders that they won, because these guys were claiming, and you're absolutely right, that we'll hit 300 in domestic, 500, 300 in domestic in short term, 500 in domestic in medium term, and 1,000 in domestic in long term. And instead of 300, I think they finished somewhere like 180 to 10, something like that. So yeah, way off the mark. But I mean, the domestic was only 18% of the business, so it didn't matter much. But the bigger part, the exports, the big orders that these guys received, that basically is a bit of confidence that these guys can do a bit decent stuff. Because Puneet, as I mentioned earlier, IKEA was 10% of their revenue. Now this new contract will give 20% of their existing revenue on an overall company level. So and they receive one more contract from Karan on the similar lines as well. So, and they're saying that they're expecting 1 or 2 more orders in the next few years or so. So even if they get few orders and do a decent job of execution, not top notch, I think yeah, they will probably do up and end up doing decently. So that basically was a trigger point for me, not their big talks, not the domestic stuff is good, it is an optionality, but it's only 20% now. But the big orders is what excited me, that hey, something good is happening here. So that's what sort of that's how I looked rather.
Apart from this, I think I can pitch in because this is one company which a lot of, I think, in this group itself might be holding with me from quite long initially. And we got out some time back and then bought it again. And then what I saw in the last few years is there is more of a scuttlebutt, what I'm telling you. So 2 years, my house was building in Delhi for quite long time. And then we started searching on all this sinks basically.
Yes.
And now we have bought all those things, basically quad things, because I was attached to this company personally, and that was a bias basically. But then when we went to the brokers, dealers, distributors, right, they were selling the local things and discouraging buying Carysil at that point of time. But eventually, the number of dealers and distributors have increased over the years. Even in Bangalore, where I'm staying nearby, I've started seeing the Carysil as a board on top of shops. And it is more coming from the chimneys and the other things basically. So the boards which I've seen is, for example, somebody selling Faber. It is Carysil has come on top of that board basically. So eventually, I think sinks is their initial bread and butter. But the other things which they are expanding, which are more of commodities, will also start contributing to the sales. And I think that will increase their OPM towards 20%. This is what I've said. Yeah. So this is what I understood.
No, you're absolutely right, Puneet bhai, because that was the last trigger point. Going into the adjacencies, going into the cross-selling side of things as well, and it's definitely, as I mentioned, as you rightly mentioned, it's the OPM will be 20% or slightly more than 20% for all these kitchen appliances and as well as the bathroom segments, according to the management. So yes, absolutely on target. Okay, I'll stop sharing now. Any questions? I'll still look at the chat, look at the WhatsApp group, and happy to sort of answer those. But again, thanks for the opportunity and thanks for your patience.
Yeah, we are towards audience poll. And as all of you know, there are 2 questions. You have to choose the options like A, B, C, D, and that's what you have to put in the chat. Read the questions carefully. The questions are a little bit more tricky in this ALD. Want to upscale the audience thing, and definitely I think they are contributing towards the knowledge and what we should look for. So yeah, but we can start question number 1.
Yeah, I will go to the question 1 first.
Cash flow from operation is part of which statement? quite an easy question actually, but little twist. But I think a lot of people have got the answers right. So we'll stop here and move for next question. Yes, you can move
Yeah,
to the
moving on to the next question then.
Yep. In the parlance of investing, low float means what? Number of shares issued by the company is low, or shares available to trade is low, or both? Okay, we'll stop it here. We'll look at the answers and let's take a 10-minute break and we'll come back with the answers and the winners, the group. So we'll start with who is the next presenter? I think Devang. I will make you the presenter. 12:20, 12:22, we'll start back. 10 minutes break. Wang, you're there?
Hi, Puruji. Yeah, I am.
Yeah, sure. So I made you a co-host. You can see you're able to share.
Sure.
And I hope rest of the people are also back. We can start our discussions on the business.
So let me know if I can start.
I think we can start now. 1222 is already there.
Cool. Cool. So hi everyone. This is Devang Pathak, and I am presenting in ALD for second time. Uh, I'm sorry for my voice. I am a little bit under the weather, and I would like to thank Puneet for giving this opportunity as usual. So this time I would like to talk about the zinc oxide. I hope my screen is visible to all.
Yes, it is.
Yeah. So let's talk about zinc oxide, what it does. So in my perspective, zinc oxide is like kalpataru for many more industries. So if I talk about few major uses, you can see on my screen. The first major usage is under the rubber and tire industry, where 50% of the global this is being used. How it is being used? Because it act like crucial activator for sulfur of this vulcanization process. It gives the texture or the tire or rubber thing which it is known for, and it gives the durability, elasticity, etc. It is also being used in cosmetic and sunscreen because it somehow protects the I'm sorry, the UV radiation. Then in the sunscreens, in under personal care, it is being used because it reflect and scatter the UVA and the UVB rays. In pharmaceutical and medical applications, it is being used as an ointment or for for its healing property or the antimicrobial property or antibacterial property. For this, the major usage being used for this pharmaceutical as well. Other uh, sectors are being agriculture, animal feed, not much of, but yes, it is being used where in their diet it is being used, or in the farming for making crops and all, it is being used. And right now it is being used in electronic and energy, where as we can see there lot many companies are emerging and popping up for the solar cells manufacturing. It is also used there as well. And the time you will see in coming years that mm, the black ZNO, that zinc and oxide, which is like the purest form of zinc oxide, it will rule for the electronic and energy sector and for its making. Some part of it being used in paints and coating and ceramics. So you will find a lot many companies which are into paint industry or ceramic industry. They use this, and why this is being used? Because the a particular ability it is giving, like glazes or frets or strength or gloss, whatever you talk it. The the specificity of particular glass or ceramics or painting you see, it is because of the zinc oxide. This is more or less what zinc oxide is being used across the industry. Now we will see how the industry analysis looks. So you will see two differences, and pardon me for that. You will find it the one which I took. It is sharing like the CAGR is 4% from 2025 to 2030, and in other you will find that for 2024 it was valued at 4.45 billion and with 6.4 CAGR, and by 2034 it will hit. So you will find a CAGR difference. The data which you see in the left side, it is a little bit old, which I took from the website, and this one which I took, it is a little bit latest. So just for the comparison purpose, why I took both of them, so that we are aware that yes, we are picking the right element through the market. And
Devang,
why?
So just interruption. So it's just the voice, or I think the internet issue also looks like to me.
Let me check. Is it is for everybody?
Yeah, little bit voice is breaking in between. I think you can speak now. Let me.
Okay. Okay, I'll check. 1, 2, 3, mic check. 1, 2, 3,
Yeah,
mic check.
now it looks good.
Cool.
It was good. Now go
Yeah.
ahead.
All right. Yeah. So when people are saying that it having the CAGR of 4 or 6, how they're saying? Because we see there are three booms are coming. One, we are aware that people tend to use more and more automotive. They're gonna use cars, bikes, etc., etc. And how?
Wait. Again, it's happening. So are you using the headphone or directly speaking?
And I'm using headphone.
So you can remove the headphone. I think directly speak on the laptop. That would be better.
Okay.
Is it okay now?
Yeah, better now. Let's see in 2 minutes.
Okay. Yeah. So I was saying that it having three major booms which I foresee, which is one is automotive. Everyone gonna use the automotive vehicles, and what it and the tire industry. Sorry, the tire will be used. Tire will be used, so rubber will be used, and we just saw that a major usage of zinc oxide is also in the rubber industry. Now, second, we are standing, in India, we see that India is a pharmaceutical hub, and people look at us. So if you see, India is 50 billion pharmaceutical industry and expect to reach 120. So it gonna double by 2030 almost. So again, it is being used in pharmaceutical industry. So we see that yes, the CAGR is supporting for that. Another like ceramics or the painting, once the infrastructure is developing, these things is going to be used for that as well. So these three things which I foresee, which will be major growth drivers for zinc oxide usage. Okay. अभी now एक दिमाग में आया रहेगा कि why zinc oxide, don't we have alternative? So let's look at those alternatives as well. अगर हम लोग बात करें रबर टायर का, we will see that main zinc oxide का alternative is active ZNO and magnesium oxide. So effectiveness, you will see, I won't go much in details, but you will see that it has a replacement quality high, and it is promising if you go about the magnesium oxide, but full replacement is yet, time है अभी उसके लिए. Reason being, just to replace something, what things are needed: research needed, testing needed. Then we need to catch one industry where these things can be used. Some client, some vendor, someone should take the risk. और वो अभी तक आया नहीं है मार्केट में. So yes, so there is time. Agricultural feed में you saw, when I started, I said that it is being used, and you will see that zinc sulfate and pro nutrients being used as the alternative of zinc oxide. इफेक्टिव है और वायबल भी है, और इंडस्ट्री वाइज चेंज भी होगा, बट उतना इम्पैक्ट नहीं करेगा. फार्मास्यूटिकल इंडस्ट्री में यू विल सी एक दो से तीन ऑल्टरनेटिव्स हैं व्हिच आर Vitapex. आई एम नॉट श्योर व्हाट CaOH2, आई डू नॉट रिमेंबर दैट, एंड प्रोपिल्स. अब यहाँ पे आप चेक करोगे तो यू विल फाइंड इट इज हैविंग 95 to 100% दिस सक्सेस रेट कंपेरेबल टू ZNO. एग्जैक्टली हो सकता है. Cosmetic and sunscreen, we will find these two which are coming onto your screen, TiO2 and chemical UV filters. Again, they're having success rate, effectiveness high, but again, preferred है. As I said, कि किसी भी चीज को replace करने के लिए you will need funding, you will need testing, you will need someone to take that risk, make the scenario around it. So as I said, in the conclusion, zinc oxide remains important in many sectors, especially in rubber, ceramic, and UV protection. That is pharmaceutical again, rubber industry again, due to its unique capabilities. Alternative exist करते हैं, but उनको आगे लेके जाने के लिए वी नीड सम टाइम. Yes, in the agriculture, in dental, cosmetic, it can be replaced, but उससे उतना फर्क नहीं पड़ेगा. Why I am saying so, you will come to know in the next slides. फार्मास्यूटिकल डेंटल ऑल्टरनेटिव जैसा कि मैंने बताया कि वहां पे कुछ ज्यादा लोग, हम सबको पता है कि 99% और 100% सक्सेस रेट के साथ वहां पे काम करते हैं फार्मास्यूटिकल में. सो जस्ट लाइक दैट nobody will replace the Vipex or neem oil profiles with ZLO. So basically what I'm trying to say is अभी time है for the replacement. Right. So many of will be thinking, or at least I am thinking that भाई point पे आ जाए कौन सा industry, so कौन सा company you are going to present. So the company name is JG Chemicals. It is India's largest zinc oxide manufacturer, having 30% share in domestic market. It is ranking that in among the top 5 global producers. Let's not confuse ourselves with China, because China holds 50%, and we are putting China aside when we are talking about the GG Chemicals. It was established in 1975 with just capacity of 600 metric ton per annum capacity, and now it is operating 70,000. Initial customer base started with 10. Now it is having more than 200 domestic customers and 50 global customers, and that too in 10 countries. So we can see कि इनका स्केलेबिलिटी पिछले 25 सालों में, सॉरी 20 सालों में, नॉट 20-25 बट ये 50 सालों में बड़ा हुआ है अच्छा खासा. हर एक चीज का एक प्रोसेस होता है. स्पेसिफिकली व्हेन यू एक्सट्रैक्ट जिंक ऑक्साइड फ्रॉम जिंक और समथिंग और एनी रॉ मटेरियल, सो ये जो प्रोसेस यूज करते हैं दैट इज फ्रेंच प्रोसेस which involves vaporizing zinc from the scrap they gather around the globe, and the high purity, not highest, but high purity zinc oxide which they produce is 80 grade. I don't have knowledge of the grades and all, but 80 grade considered to be a good grade for rubber industry at least. They have 3 plants. So first plant in Jangalpur, you will see that 14,400 is being used for zinc oxide. 5,000 plus is where the plant is being used for the recycling part. In the plant 2, that is Bilor, it having capacity of 1,800 metric ton per annum capacity. Now, the plant 3, which is the crucial for them, why I'm putting it crucial, because this is the only plant in India which is having a IATF, this is International Automotive Task Force approved globally, and it is one of the plant which is having WHO certification, and it is the highest producing zinc oxide for the JG Chemicals. It also deals in zinc sulfate, so they are trying to capture the market for zinc sulfate as well. Now, I mean, I was thinking that why I should capture this. As I mentioned that बहुत सारी industries हैं. It is being used in rubber. It is being used in pharma. Are these people capturing those? So 2024 में if you see 90% इनका revenue आ रहा था from rubber industry. 6.9 pharma, let's say 7% pharma and chemicals से आ रहा था. Now they have converted into 85 and 8.2, which is a good news for me. Okay, so let's talk about the खास बात as in इनका strength क्या है. So अभी as one thing I mentioned कि French process है इनका, तो इनका जो process है to scrap to what you call it, the to have the zinc oxide, they do the recycling, and that to have from the zinc scrap. Globally इनके पास vendors हैं which from where they import the scrap. By the French process, they extract the zinc oxide. So they have achieved a vertical integration. बहुत कम कंपनियां हैं इंडिया में जो करती हैं. One is this, second is Hindustan, I guess Hindustan Zinc, this Tata Chemicals. तो ये बहुत कम लोगों में आता है. So ये इसका strength है. दूसरा, you will find top 9 customers of 10 or top 11 customers of India are already their customers. तो इनका अच्छा खासा होल्ड है मार्केट में, 50 साल का एक्सपीरियंस है. एज आई ऑलरेडी टोल्ड कि कहाँ 10 कस्टमर से दे आर कैटरिंग ऑलमोस्ट 250 कस्टमर्स एज ऑफ नाउ. 80 ग्रेड का इनका जिंक ऑक्साइड है विच इज गुड एज पर द कस्टमर रिक्वायरमेंट. चाइना का थ्रेट नहीं है, रीजन बीइंग कि इनका जो प्राइस फ्लक्चुएशन है वो लंदन मेटल एक्सचेंज के थ्रू चलता है, और प्लस स्क्रैप मंगाते हैं फ्रॉम द ग्लोब एंड दे एक्सट्रैक्ट फ्रॉम इट. सो चाइना का उतना बड़ा थ्रेट नहीं है इनके लिए, सो दैट दे कैन कंट्रोल द प्राइसिंग एक्सेट्रा. As I've already mentioned, it is only a facility having IITF certification. It is, so you just saw over here that it is already serving lot many industries like let's say rubber, pharmaceutical, agri, and others. When we say others, the ceramics and painting, etc. So, but with all this, we see that it is already come to the point where they call themselves as a brand. And why they say this? So because they're having the client stickiness of 90% का उनका सक्सेस रेट है. और ये जो नंबर है 9 out of 10 और 10 टॉप 11, ये ऐसे नहीं आते. इट टेक्स दैट मच एक्सपर्टीज, दैट मच एक्सपीरियंस. नाउ सो क्या इसे कोई रिप्लेस कर सकता है? सो द आंसर इज नॉट दैट इजी सर. Why? Because on average, it takes 4 to 5 years minimum to get approval from large tire accounts. उनसे approval चाहिए 4 से 5 साल में. What they will look for? They will look for the vendor having large size. They want to have which having the consistent quality system. They want to have who have the sourcing from good vendors so that their supply do not stop. And plus they would not like to have the new vendors and where they need to test it, and they need to guide them that what kind of quality they need and what kind of material they need, etc, etc. So for the new entrant, it is virtually impossible to have the large scale facility. पैसा भी लगेगा, patience भी लगेगा, और धंधा आएगा कि नहीं आएगा, that is different. So it's not that easy. Second, as I mentioned, इनका vertical integration बहुत कम कंपनियां हैं in India which had achieved this, and it is one of them. So again, बहुत सारे शेप में आता है स्क्रैप, एज यू आर अवेयर कि कोई कंपनी अलग देती है, कोई कंपनी अलग देगी. Especially in the, if you go for the steel companies, they will give you a different size and shape. You need to gather them, then you need to put them into your facility, you need to extract, etc, etc. You see, बोलने में ही it seems like how difficult it is. So unless and until you have that much experience and funding, you will not go for that. Plus ये जो फार्मास्यूटिकल हो गया, टायर इंडस्ट्री हो गई, these things having these require a specific grade जिंक ऑक्साइड, स्पेसिफिक उनका रिक्वायरमेंट होता है स्पेसिफिकली फॉर फार्मा. सो उन सारी चीजों को याद रखते हुए, दिमाग में रखते हुए, आई कैन से दैट यस, इट इज नॉट दैट इजी टू रिप्लेस zinc oxide and or to become JG chemicals. Now, we will talk about the, not talk about, you can look at these names which is on your screen. Big names from the market you will find. I won't go much in details. So basically what I'm trying to say, बहुत scope है. And how I'm saying so? Because you will see पूरे के पूरे वर्ल्ड में 50% रेवेन्यू अगर रबर से इंडस्ट्री से आता है, 25% सैमिक से आता है. इंडिया में 70% है रबर का इंडस्ट्री, और जेजी केमिकल्स अभी तक सिर्फ 85% कैप्चर कर पाया है विथ रिकॉर्ड्स ऑफ 2025. So if I just look at, I'll exclude the world part, I'll look at the only India, still there is 15% where they can capture it, they can reduce it, and plus the other 20 where they just from 6.2 to they gone for 8 point something फार्मास्यूटिकल में, वहां पे भी अपना एक्सप्लोर कर सकते हैं, डाइवर्सिटी और बढ़ा सकते हैं. आई जस्ट स्टेटेड दैट कि नॉन रबर इंडस्ट्री में इफ दे आर फोकसिंग, विच दे आर फोकसिंग, and if they can substitute the imports pharmaceutical, because we are the hub for the globe in the global term as in India. So yes, scope अच्छा खासा है. Now this JG Chemicals will benefit how? As I mentioned, automotive tire demand बढ़ेगा. 2022 में ही we saw that 25% year on year export इंडिया का हुआ है. फार्मास्यूटिकल इंडिया इसका जो स्पेसिफिक कुछ क्वालिटीज है जिसमें कि इसका एंटी कैंसर एंड एंटी बैक्टीरियल प्रॉपर्टीज भी आती है. इट विल हेल्प इफ द जेजी केमिकल्स गो फॉर इट. इंडिया एज ऑलरेडी मेंशन 50 से 120 होगा 2030 तक. So if they can contribute towards it, they can be the bigger name like Tata Chemicals. And plus solar energy, as I mentioned earlier, कि black zinc जो है, it is going to be used in the solar panels for the more what you call absorption of the rays, etc. Now, इतना सब बातें तो हो गई, but their strategic initiative, are these aligned? So let's talk about it. Yes, they are aligning in two pieces as every company does if they want to explore the new horizon. Capacity expansion. प्लांट 4 इन्होंने जस्ट एक्वायर किया है मई 2025 में. इनका प्रोसेस कंप्लीट हुआ है एक्वायरिंग का. एंड व्हाई दे वांटेड टू एक्वायर दैट? बिकॉज दे वांटेड टू पेनिट्रेट द वेस्टर्न पट्टा ऑफ इंडिया, जहां पे कि वो 15% मार्जिन अपना कम कर पाएंगे. एंड दे कैन रिड्यूस नॉट टका मार्जिन बट लॉजिस्टिकल कॉस्ट दे विल बी एबल टू रिड्यूस. And plus they want to have more and more uh, uh, check the alternatives for zinc. There are, as I mentioned, black zinc hai, then they have nano zinc, there are many others. So they would like to go into the research and development for that, so that will be used for that as well. जो नैदुपट्टा का एरिया तो उनका मेजर प्लांट था, वहां पे भी उन्होंने जस्ट रिसेंटली कुछ एकर्स ऑफ प्लांट खरीदा हुआ है टू एडवांस देयर रिसाइकलिंग थिंग. एंड जिंक सल्फेट का वो लोग प्रोडक्शन बढ़ाएंगे वहां पे. Here in R&D, they will be evaluating various initiatives, which I already mentioned that for the existing customer, what extra they can give, they will be going for that. Developing the other rubber chemicals, as I already mentioned, that zinc oxide 50% market capture karta hai. So how good quality product they can give to people. So they are already working on that. अभी इतना तो बात हो गया, which is something from the management and from the slides. तो अब थोड़ा नंबर देख लेते हैं इनका. 2024 में इनका आईपीओ आया था. पब्लिक के लिए 1650 मिलियन था. एंड यू कैन सी द यूसेज ऑफ द अमाउंट. सो आई वोंट गो मच इन द डिटेल्स, बट 560 करोड़ ऑलरेडी यूज हो चुके हैं और 933 करोड़ आर स्टिल इनटू द बैंक एंड इट इज सेफ. If we talk about the revenue, you will see 22 में ठीक था, 23 में बढ़ा, 24 में it went down and 25 is good. Same goes for EBITDA. Net worth तो no doubt बढ़ा ही है. But when I saw that why it is going down in 2024, so I looked at the zinc oxide का import and I saw that it was a global price fluctuation. You can see over here. अच्छा खासा डिप हुआ था. जिंक ऑक्साइड का प्राइस डिप हुआ तो डेफिनेटली कॉस्टिंग डिप होगी. रेवेन्यू से हम चार्ज कम करेंगे अपने कस्टमर्स को, अल्टीमेटली रेवेन्यू पे इम्पैक्ट जाएगा. सो दैट इज ऑल हैपेंड. सो बेसिकली वी कैन से दैट इज अ साइक्लिकल इंडस्ट्री. हमें वी हैव नीड टू वॉच आउट दैट if we are investing, we need to keep in mind that yes, these type of situation will come in future as well. बैलेंस शीट के लिए बारे में बात करें अगर हम, तो फ्यू थिंग्स विच आई लाइक कि ये बोरोविंग कंटिन्यू कम करते आ रहे हैं. ये बोरोविंग कम करते आ रहे हैं. ये अपने प्लांट्स पे खर्चा कर रहे हैं, दैट इज गुड थिंग. इनका 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 जो कैपिटल इन प्रोग्रेस है वो बढ़ा रहे हैं, दैट इज गुड थिंग. इन्वेस्टमेंट करे, दैट इज गुड थिंग. फ्यू थिंग्स विच फॉर मी नॉट अ रिस्क फैक्टर बट दे नीड टू इम्प्रूव इज उनका ट्रेड पेबल्स, ट्रेड रिसीवेबल्स और इन्वेंट्री पे कुछ काम उतना नहीं कर पाएंगे. रीजन बीइंग कि इफ दे हैव द इन्वेंटरी देन ओनली दे विल बी एबल टू कैटर द मार्केट. बट दीज आर द थिंग्स व्हिच आई फोरसी दैट these are the improvement area. And we talk about the shareholding pattern, you will find that this promoter ka khud pe bharosa, it is 70.99 and 70.99 is persistent from 2024 till 2025. So they are pretty much confident what they are doing as of now. Abhi we have talked lot many good things about, but let's talk about कि इसमें कुछ रिस्क है? अगर रिस्क है तो क्या है? एज आई मेंशन कि अभी का जो 2025 का इनका आंकड़ा था, वी सॉ दैट 85% रेवेन्यू comes from the rubber and tire sector. So it's two-way sword. अगर वो इंडस्ट्री इम्पैक्ट होती है, वहां पे कुछ नया टेक्नोलॉजिकली एडवांसमेंट आता है, डेफिनेटली इट विल हैम्पर जेजी केमिकल्स लाइक एनीथिंग. सो जितना अच्छा है उतना बुरा भी है. बट आर दे वर्किंग टुवर्ड्स इट? यस, दे आर वर्किंग. They were almost 90%, 89 and 90%. They came to 85 and expecting if they can bring to a 50% of their revenue from the rubber and tire sector, this risk will be minimized. Second, एक कहावत है कि ज्यादा एनालिसिस वाले पैरालिसिस में चले जाते हैं. सो दिस R&D thing which they are doing, be it for the other plantation or the other alternatives of zinc oxide, etc., if they delay it, they will be pushed behind market trend के हिसाब से. We just saw that how in 2024 the price got collapsed for the zinc and how it impacted GG chemicals. As I already mentioned कि China का export dominance 55% है, and if they want to, probably they will cut the prices below the cost, और उससे definitely GG chemicals को घाटा होगा. सप्लाई चेन, एज आई मेंशन कि इनका एक्सट्रैक्ट आता है यूएई से, कुछ यूरोप से, एक्सेट्रा. सो वी जस्ट सॉ दैट how geopolitical relation or connection or the anything which is geopolitical, if they dance it around, it can impact. Recent tariff dance by Trump. And most important, agar as of now we see that ESG is coming to the picture more and more. कार्बन फुटप्रिंट कम करना है, रिसाइकलिंग वाटर ज्यादा यूज करना है. सो जस्ट फॉर गिवन एग्जांपल, ये 80% ऑफ टारगेट, 85 to 85%, 80% टारगेट वाटर यूज, रिसाइकल्ड वाटर यूज करते हैं. एंड Tata Chemicals does 100% of recycling water usage. So they still have a chances. But if tomorrow, if the regulatory comes कि नहीं आपको 100% use करना है, it will impact JG Chemicals as well. Well, I'm sorry. Now let's talk about the chart. See, 2024 में आया है, so I don't have much of transparency कि इनका chart में मैं क्या क्या देख पाता. But what I could see is it, because of the commodities, it formed the bottom and it is going up. So I have some position which I made into the bottom, which I feel so. And next, which I feel is this is the resistance level, this is a resistance band which I feel. And if it crosses it, it may give and may not give a good opportunity to invest or have the return out of it. So this is about the chart. Abhi, I would like to conclude myself that JG Chemical Limited, it is good for long-term investors. Why? Because of the zinc oxide usage and its hold into the market. We need to trust the experienced management because the Junjunwala family, it is holding this company and they are into this business for last 50 years. So we need to trust them. रॉ मटेरियल कॉस्ट है, बहुत सारे थ्रेड्स हैं, बट पर्सनली आई विल ट्रस्ट बिकॉज ऑफ देयर एंथुजियाज्म एक्सेट्रा, वर्टिकल इंटीग्रेशन स्ट्रेटेजी जो भी बना रहे हैं वो लोग. एंड आई विल वॉच आउट फॉर नेक्स्ट कपल ऑफ years or quarters if they can walk their talk. मेरे लिए horizon is 3+ years. And after all this, I would like to say that this presentation is only for education purpose. अपना रिसर्च खुद करें, एक्सपर्ट नहीं हूँ मैं, गलत भी हो सकता हूँ, सही भी हो सकता हूँ, बट दैट इज ऑल फ्रॉम माय एंड. थैंक यू वेरी मच फॉर your patience and listening me out.
Great, Devang. So it's a different way of presenting. I think people will love it. Oh, already Amar has put this. Great. It's much improved from the last time, I would say, and really a good company looks like to deep dive. Any questions from audience? So one question I have is when you're saying the zinc prices might crash and because of it, it comes down basically. So zinc is a material, right, for them, if I understand.
I'm sorry.
Zinc is a material for them, right? They would.
Yes, zinc is material for them. But the good part is, Puniji, ये लोग they do not इम्पोर्ट फ्रॉम माइन, जैसे कि अगर आप जिंक, अगर आप क्या कहते हैं इसकी बात करें, हिंदुस्तान जिंक की बात करें, तो उनका स्ट्रेटजी है डायरेक्टली माइन से उठाया और ले लिया उसको। बट वहां पे जितना एक्सट्रैक्शन होगा उतना ही आपको मिल पाएगा। बट थिंग विच दे डू इज वो स्क्रैप इकट्ठा करते हैं। तो जिंक का मार्केट कोलैप्स होगा, प्राइसिंग प्राइसिंग पे इम्पैक्ट होगा, बट अनटिल एंड अनलेस इनको वेंडर्स मना कर दें टू गिव देम देयर स्क्रैप, there will not be much of impact on them.
So their contracts would have this price inbuilt. Anything you read on that part? Their customers pass through of this increase or decrease in the zinc prices. Is that built in the contracts? Anything from that angle?
Yes, I have read. You are talking about from the vendor side, right? The people who provide them the zinc scrap. Right. हाँ, so they have long-term contracts. So यही risk है. I believe they already worked upon that. They have the long-term contract with those vendors that they need to provide. And जहाँ तक मैंने पढ़ा हुआ है, almost the vendors with whom they got connected initially, most of the vendors are still with them.
Okay.
So with that is also thanks Puniji putting that into this in your question. So yes, vendors अच्छे हैं, और vendors अच्छे हैं इसलिए वो लोग client को दे पा रहे हैं what they need. So supply and demand they can match because of the vendors only.
Okay, that's all I have. Let me check any questions in the chat. Not as of now, but you can look in the chat if some people have a question and then answer it there.
Sure.
Thanks
And
once again for your effort and really good presentation.
thank you, and I hope I didn't bore you all
It
in
was,
the English say.
it's I loved it actually. Personally.
Thank you, Puniji.
Yeah.
And thank you everyone. I'll stop my share.
We'll move to Jasprit. Jasprit, I made you the
Hi.
co-host. Yeah.
Am I audible?
Yes, you are.
Okay, let me share my screen. So is my screen visible?
Yes, it is.
Yeah. Okay. Okay, good afternoon, everyone. So today I'll be talking about Transrail Lighting Limited. It's an EPC company mostly into the transmission and distribution segment. But before we start, so a standard disclaimer, I'm not a SEBI registered advisor. You have to do your own due diligence. This is not a buy sell recommendation, and it's only for educational purpose. So we are just discussing a business over here. Oh, sorry. Yeah. Okay, so talking about the history of the company started around 4 decades ago. So it started as a Transrail engineering company. Then couple of their manufacturing facilities came, the tower manufacturing in Baroda, conductor manufacturing in Silvassa. And now,
Sorry, just with Amar here. Sorry to interrupt, but your display has gone. Can you reshare it?
sorry, let me see. Is it back now?
Not yet. Yeah, it is now. We can see it.
Yeah. Yeah, so talking about the history of Transrail, so it started in 1984, and it started as Transrail Engineering Company, and after that, in 1993, there was Associated Transrail Structures Limited, which incorporated the tower manufacturing in Baroda, and then after that, a couple of other manufacturing facilities came into being. In 2000, I think 8, the Transrail Lighting Limited was incorporated. Then there was a merger with GIL, Gammon India, and then the transmission and distribution business of Gammon India was demerged from and given to Transrail Lighting Limited, and that's how the company has evolved over a period of time. So the good thing right now is that the stock was recently listed on the stock exchanges in 2024, and they have now also started foraying into the solar EPC. So when we talk about the business leaders, so we have Mr. Digambar Bagre, who's the chairman of the company. He started the company around 4 decades ago. So he has also worked in KEC International, which is one of the competitors of this company. Later on in 2020, Mr. Randeep Narang, who is the MD and CEO of the company, he joined this company. And prior to that, he was also in KEC International, where he was the president of International Transmission and Distribution and Solar and Cables. So one of the important part here is that this person over here, he's trying to transform the company right now. The share of the international orders has also started going up since he came into the business. So this is someone we have to really track over a period of time, how he makes the company go ahead. If you talk about the business verticals, so they have four major business verticals: power transmission and distribution. This accounts for around 85 to 90%. Poles and lighting, it's a very small part of it. Then they have railways, where they are involved in the railway electrification, as well as tiny amount of track laying and track linking. And then civil construction is another major part of it. I mean, from the remaining, after you remove the transmission and distribution. I'll discuss all these verticals later on. But let's first talk about how power transmission happens. So mostly we know all the power plants in India, or let's take it anywhere else, they are mostly in the remote locations. To get the power to our homes, there's a long process. First is that the power, the current is not just given to the lines and they carry it. We have to step up the power of this electricity. So that's where the high voltage or really high, extra high voltage lines come into the picture. They usually step it up to 765 kV or 400 kV. After that, the reason why they do it is so that there's very limited loss. If we talk, I was going through some of the documents. So for every 160 kilometers, if you are at a very high voltage, so that your current loss will be around 0.6%. So the important factor here is that you do not lose too much of current. You have high efficiency transmission, and once it reaches your second transmission substation, from there it is stepped down to the next level of voltage. And finally, this is how we get the electricity at our homes, which is usually at very low voltage. So this is how it happens. So one of the major component of the power and transmission segment of Transrail is that they manufacture their own towers. So what they say is that they manufacture lattice towers. What are lattice towers? So basically, these are the interconnected steel structures. So all these steel angles and channels, or let's just say steel components, are joined together. So they form the lattice tower. Usually, these big lattice towers are used wherever the transmission is done at very high voltage. So that is number one. And another part is that they also manufacture their own conductors. So I'll come to the conductors, but if you look at any, we must have seen, not in the metros, but if you go slightly outside the metros, you see a lot of these big towers, and they're really fascinating to watch. So they have these conductors are like cables, and then these are your towers, and they also have these insulated discs, though not really relevant for this business. So this is one of the key component of Transrail, that they manufacture it, and then when they get the order, they also use their own towers and they install it. So that's how they are backward integrated. Now let's come to the conductors. So usually this is how the conductors look. They're slightly a lot more different than what our wires and cables look. So these are not insulated. These are more or less metal rods which are going directly from tower to tower. Now, there are four types of traditional conductors. For example, the first one, which is the AAC, it is all aluminum conductor. Okay, but not really ideal for very long distance. The second one, which is all aluminum alloy conductor, it is something which Transrail makes. If you go through their documents, you'll find that AL59 is one of the conductor which they make. This one is the aluminum conductor with steel reinforcement. So it's steel on the outside. It's also not a very efficient conductor. And the last one is the aluminum conductor with alloy reinforced. Now, when I was going through the RHP of this company, I realized there was a section which was mentioned where it was mentioned that a lot of the old conductors, which are or the old transmission lines, they have this aluminum conductor with steel reinforcement. The problem here is that at the temperature of around 85 degrees Celsius, they really start having, losses, as well as the sagging starts to happen, because as your electricity or the current passes through these conductors, the temperature goes up, and then you have, with temperature, you have the length of the conductors increases and it sags. So the opportunity here is that going forward, a lot of the transmission lines in our country, they'll be changing the conductors, while the your remaining infrastructure will stay as it is. You'll not be having any right of way issue, but this will be one opportunity which will come somewhere in future for Transrail. And the second part is that now Transrail is one of those companies which has started making the HTLS, the high temperature, low sag overhead lines. Now, when we talk about power transmission, we have to understand one thing. Hello, yeah. So we have to understand one thing, that as the voltage of the electricity is increased, it can pass through a lot of different mediums. So it is very important that it stays overhead, it stays far away from our trees, our homes. So that is one of the important factors here. That's why to have the new conductors which can stay, relatively straight at even very high temperatures of around 250 degrees, it's very important. And also not having any sag and having good efficiency. So these are the three important factors over here. And another study which I read was that in India, because of the old conductors, or the total transmission losses, the yearly loss is around 1 to 1.5% of the GDP. So that's a big number. And somewhere, if the modernization which is already going on, that will definitely have this aspect coming into the future. So when we talk about the manufacturing facilities, they have four facilities. Let's go one by one. So for towers, they have two facilities, one in Baroda, one in Deoli. These were established a while back. So the capacity is 30,000 and 50,000 metric ton. Next, we have conductors. So the conductors facility is in Silvassa, where they can make 48,000 metric ton of conductor. Sorry, this is, I think, kilometers. And then they also have poles, which is around 12,000. So one important thing here, it's not really a risk, but in different annual reports, the capacities were slightly different. If I go through the 2022-23 annual report, the capacities were different. In 24, the capacities were different. In RHP, the capacities are same, but then they come with a star mark, which shows slightly higher capacity based on the approvals they have, but probably they don't make it. Another important part to understand here is that around 90% of 95% of the capacity is already being utilized. So definitely there's a lot of scope. In addition to these four facilities, they also have a tower testing facility where they have tested more than 476 towers. I think this was somewhere in the June 24. By now they would have tested more. Around 50% of these towers which are tested, they're tested for the foreign clients. And they also have, they can test towers which are of the height of 85 meters and 1200 kV. The kind of tests they do, it's very important, because once you have your tower installed, you don't want that, let's say there's a Aandhi Tufan or something like that, and your tower goes down. So a lot of different types of tests which are related to load and shear are done on, and also the type of material they have used. So that's why this testing facility is a very important tool, facility for them, and it's also NABL accredited. So when we talk about their power transmission and distribution, now considering that they are making their own towers and conductors, so they have said that around 65 to 70% of the contract value is where their own materials come into the picture. While this is also a number which you have to, if you go through different documents, you'll find somewhere it will be 50 to 60, somewhere it will be 60 to 70. So you have to take it with a pinch of salt. In terms of capabilities, they have capabilities of EPC contracts up to 1200 kV, which is super high voltage. Then they have this air insulated and gas insulated substations of also 765 kV. They make their own towers, conductors, monopoles. They have taken some of the projects like this 800 kV HVDC line. It was, I think, awarded recently. It was there in the transcript of Feb 2025. And then they are going to be, or they are already making this HTLS conductors. When we talk about civil, so they take a lot of projects which are really fascinating. For example, the one which we can see in the picture, it's a 199-meter tall natural draft cooling tower. So I mean, I've seen cooling towers, but this is something really big, and it's the second largest in India. So definitely the company has some capabilities to be able to make a cooling tower of this size. Also, they were awarded a contract of Kosi Bridge, which I think was also one of the longest or something. When we talk about railways, so they have been involved in the electrification. I think this was one of the first job which they got somewhere in 1984. Also, a lot of other smaller jobs like track linking and track laying. Poles and lighting. So it's a very simple business, but if you're somewhere in Mumbai and you've traveled on the Atul Setu, you can see the lights and all which have been installed are done by Transrail. And the solar EPC is the new segment where they have recently entered. So when we talk about the financials, so yeah, so order book is something which is, I think, one of the key triggers. We'll be discussing it, but it is definitely improving year on year. The revenue is also increasing every year. For example, when we were in FY24, they had given a guidance of 30%. So I think by the third quarter of FY25, yeah, we were already assuming whether they were going to make it to 5200, which was the guidance which they had given, but they achieved it. Similarly, when we talk about the EBITDA, it is also growing. We'll come to the EBITDA margin in a while, and the PAT is also growing. Just a second. Yeah, so when I talk about the other financial results, so one thing is there that the EBITDA margin in FY24 was 11.7%. Now it is 12.73. The management is guiding for 12 to 12.5. The important factor here is that uh, a lot of the places it is written that their direct competitor Skipper is, they claim to be one of the best cost company, but even they are doing only 10%. So when they say they are doing 12%, it's something you have to really track uh, whether they are maintaining this or not. Second is that when it comes to the other factor which really helps in the margins, it is their own. There are a lot of international orders where they get 1 to 2% margin higher, and also they have their own towers, their own conductors, their own monopole. So definitely that is also helping them in getting slightly more margins. So this is one important area. So order book is something which is increasing year on year now. As of March 25, they had an order book, unexecuted order book of around 14,551. After that, also they have, I think there were two more orders which they received. One was around, I think, 1,000 or something, and the second one 560 crores. So it has definitely grown up. The domestic mix is also increasing. If you go through their previous conference calls, definitely a lot of orders are coming from the domestic side as well as the international ones are there. So the bigger opportunity here is also that in Africa, I think the access to electricity is not there for around 40% of the people. So that is one main area that as Africa grows, definitely Transrail will have more opportunities, but obviously it comes with a lot of risks. It's not a very stable place where you'll be doing the business that easily. In terms of capex, so this is a very important slide for us because the management is going to what they're saying is that they are increasing the capacities. So the IPO was of around 400 crores, out of which 90 crores they are using for capex, as well as some other which they'll be taking from the internal accruals, or probably they'll be taking debt for it. So total capex will be of around 327 crores. But the important part is that the tower capacity from 84,000, it will eventually go to 1,96,000. It's around 2.3x. Your conductor facility will also, capacity will also increase by almost double. So the brownfield part of it is expected to be completed by, I think, around July or something. That's what they had given a timeline of around 6 months. So around 25 to 30% of the capacity is supposed to increase in that period, and then probably by in end of next year or maybe by July, I think we'll have most of this facility ready. So the way their orders are coming up, definitely they need their own towers, their own conductors, and if they're going at 95% capacity utilization or 100% in case of conductor, it is very important that they ramp up their facilities, which they are doing. So also it shows that they are prudent or they know what they're doing. When we talk, when we talk about the competitors, so Transrail has the direct competitors are KEC International. We have to know that they're okay. The chairman worked here around 40 years ago, but Mr. Randeep Narang, who is the current CEO or MD, he joined from KEC where he worked for around 10 years, and now he is with Transrail Lighting. So when you pick a person of at that level, it definitely helps a lot because a lot of clients also, there's a probability they'll go to Transrail, or considering if that kind of connection he has or that kind of influence he has. But at the same time, if we talk about the capability, if somebody has worked for 10 years in KEC International, it's very good for Transrail that this person is coming here. Then we have Kalpatru Projects, another big company in terms of transmission and distribution, but they also have other verticals like oil and gas. Skipper is more or less the direct competitor. But the important part over here is that the Transrail Lighting is the one which has the lowest P right now. So there's a huge opportunity, if not huge, at least some opportunity that there might be some re-rating. I'm not saying that we should even hope for 41 or something, but even 35 is not bad. So that is something we have to look for. And I think a lot of chatter is around that this should happen. When so in Screener, I went through the comparison of the sales, operating profit, and the margin. So one thing you can see, that the sales of Transrail is definitely increasing by a lot. It's not so much so for Skipper also, it's okay, but you do not see really significant jumps the way you see for Transrail. And definitely the operating margin also for Transrail is 12%, Skipper is 10, these guys are 8%. So while it's a good thing, but still we have to be alert about it. So the growth triggers, yeah. So they have a huge order book. if their current revenue is around 5,300, their order book is around 16,000. So it definitely gives us a visibility for the next 2.5 years. 90% of the order book is from transmission and distribution. So that's a very healthy sign, considering it's a sector which is going to grow definitely for the next coming 5 years or 10 years. They are increasing their capacity. So the current capacity utilization is very high, which I already mentioned. Margins definitely because of international orders as well as their own backward integration. They have high margins. Uh, they are already in HVDC, but this is another area which is very important because the main reason why HVDC is going to pick up demand or is already picking up demand is because in India, we have a lot of renewable power which is coming up in remote locations. So when you transfer the renewable power to your cities, it's the efficiency, or let's say the losses, should be less considering the distance is very high. Now you can do that with the AC transmission as well, but there will be slightly more losses. For example, in uh, AC transmission, you will have 0.6% per 150 kilometers, but in case of DC, you will have around 0.45% per 150 kilometers. So it's more of a cost benefit analysis wherever it is viable that we are going to save more money by using a higher capex item, which is HVDC. So that's where this comes into the play. Also today, somewhere I read that in the quality power conference call, it's also mentioned that in case of UK, a lot of HVDC orders are being given. So something like that is going to happen in India also. So industry tailwinds, and definitely transmission is a big theme going forward. And they are aiming, so while the last year the guidance was 30%, but they're still aiming for 23 to 25% of growth next year. We are assuming it will continue at least to 2020, around 20 to 23%. And they have a market share of around 10 to 12% in transmission and distribution in India. So a lot of growth triggers are there. Now let's address the elephant in the room, the Bangladesh order. So they got this river crossing project, I think a year and a half ago. Now in September, there was a political unrest. So that's when a lot of doubts started creeping up that how, since this was almost at 20% of their entire order book, how this was going to play out. But as of now, it forms only 12% of the order book. By the end of next year, it's going to be very low, around 5 to 6% of the order book. Eventually, by June 2026, it's going to complete. So this year, I think they did around 1,200 crores of the business. And out of that, $70 million, around 560 crores they have already received. This is the receivable we have to be really careful. We have to watch out for by when they receive it. And so what MD told in the recent conference call was, we are executing well, payments are on schedule. This is a priority project and we aim to finish by June 2026. So there are a couple of other factors also. This project is very critical for Bangladesh government because once they do it, they will reduce some dependency on India for electricity. That's one of the reasons. That's why they are really going to push for it. So let's hope for the best here. Now, some of the risks here are, for example, the higher customer concentration. So around 60% or 70% of the revenue comes from this top 5 and top 10 customers. But the kind of business it is, I believe this is going to happen. You'll be getting orders only from the big government companies like Power Grid and also that's something acceptable. So Bangladesh exposure and other geopolitical risks, for example, they're also into the other geographies like Africa. So we have to really be careful. But I believe it's spread out. So possibly it's once the Bangladesh part gets over, the risk factor here will slightly go down. Now, execution and labor availability. In one of the conference call, I read that there's a shortage of skilled labor. So I believe this is going to play in India going forward as per capita income rises. These are not easy jobs. They're really tough jobs for people to do, but having skilled labor, it's a very important factor. I've worked for a couple of years as an engineer, and I know that if your 10% of the labor is good, they take care of 90% of the remaining labor. So it's very important to have really good couple of people in your this labor force. So I believe if this shortage is there, definitely it also the second order thinking will be that not a lot of other companies will easily come up, because you really need to have good facilities, good execution capabilities, and labor really makes a big difference. So interest cost, definitely they do not have too much of long-term debt, but yeah, for their working capital requirements, they use up a lot of the short-term borrowings. International credit and this foreign exchange risk. So forex is definitely going to play out. Also, but they have mentioned that a lot of their orders they are backed by multilateral funding agencies like World Bank and other big banks. So there's a and they also receive bank guarantees. So most of the stuff is secured. So that's a good thing. Now litigations is another area. If you go through the RHP, you'll find a bunch of them. So if you are investing in this company, you have to really be alert. If something happens, how much of money they are going to lose. If it's not too much, then it's okay. But a lot of EPC companies usually have it's a very common thing for them to have such type of litigations. So these are the projections. While we can do all of these projections, but we have to really understand the order book for the next 2 years. It's 16,000 they already have. Even if you split it, you get 7,000 or let's say 6,500 or 8,200. That kind of mix will come up. If they sustain their margins, that will be a very good thing. So the capacities are going to grow. So eventually, I believe you can easily have a doubler in 2 to 3 years. But if something goes wrong, definitely that can be a problem. So technicals, I think after the recent result where there was really good uptick in the revenue as well as the margins were good. So you can see a gap up over here with high volumes and then another one over here. So right now it's touching its 20-day moving average. So keep an eye on it. Because I think one of the holding company called Asiana Holding, which I think is by Asian Paints or something, and so they've been selling for the last couple of days. So it might be a pressure because of that. So some fun trivia when you talk about how much cost per circuit kilometer for, let's say, the very high one voltage 765. So it'll be like 12 to 15 crores. So the number of towers per kilometer will be around 9 for this, 9 to 10 for this. This is something I use ChatGPT just so that in case somebody wants to see or maybe go deeper into the unit economics, they can do that. But I found it very fascinating that how your steel, the tower weight also increases significantly. It's around 15 to 20 when it's low voltage, and for 765 it goes 25 to 35. And last is that in every conference call or every document, you'll find reference of Jack Welch. So I mean, if they really live up to it, it will be a very fascinating thing. So that's something you have to see. If they really believe in a good leader, I hope they become or they already are good leaders. So thank you for this presentation. And another important factor is if you ever get time to see the logo of Transrail. I mean, I was really impressed with the logo because the logo clearly speaks what they do. Thank you.
Great, Jaspreet. So
Thank you. Thank you.
one question from
Yeah.
Pramod. Aren't the monopoles better than traditional towers, which Bezel is also doing? Have you compared this with Bezel for this?
No, I haven't yet. But I'll definitely look into it, how monopoles are better than the traditional towers. Because I believe these guys are into the lattice towers, which are for really high voltage. But if they are also for very high voltage, definitely I'll go through it. I haven't read about that.
And we have one more presentation last time, KP Green by Suraj.
Okay.
And they are also building into this kind of
Yes.
towers as well. So
Right.
just have that comparison somewhere and please share.
Sure,
with me.
sure. I'll do that. And is there any other question?
No other question, I think, from the chat,
Jaspreet,
but from the audience,
no,
they can ask.
yeah,
Go ahead.
no
Yes.
questions, but I just wanted to say that this was one of the shortlisted topic I wanted to give, that is Transrail. So you
Okay.
did better in this. Thank you.
Oh, thank you so much. And also thanks, Punitji, for giving this opportunity, as well as thanks to Shekharji for having an awesome channel, and Farshad. So he's the one who has motivated me to do it. So thanks a lot to Farshad for it. Thank you. I'll definitely look into the KP Green and other monopole art.
Sure. Okay. Thank you.
Thank you.
And, we will move to the next presenter, Pramod, which is. Yes, we are able to see your screen.
Yeah. Good afternoon, everyone. Is my voice clear?
Yes.
Yeah. Thank you, everyone. Thank you, Punitji, for providing me this opportunity. So today I'm going to speak about the company which is powering the Indian securities market. It is the ultimate beneficiary of the growth in the capital market. So it forms the cornerstone. I would like to say the center part of the capital market. So whenever this capital market growth is happening, this company is going to be the main beneficiary of it. So it's a part of the market infrastructure institutions, where it is a part of the capital market structure providing the services to all the market participants like exchanges, clearing corporations, depository participants like brokers, issuers like companies, and the investors. So we all went through the quote by Warren Buffett: the best business is a royalty on the growth of others, requiring the little capital itself to run itself. So this is a company which doesn't run on royalty, but the growth depends on the overall the market infrastructure structure institution, and it is a direct beneficiary of it. So this company has very good financial metrics: ROCE of 41%, ROA of 30%, and ROA of 26%. So a company having such good metrics, does it have a growth in the business? Has it shown the growth? Yes, definitely yes. In the last decade, it has shown a revenue CAGR of close to 27%, as well as a PAT CAGR of 28%. So the company which I'm covering today is CDSL. That is the Central Depository Services Limited, which is already done 25 years of its existence and going very strong. So I am Pramod Bia from Bangalore. Thank you once again, Punitji, for providing me this opportunity. I'll be starting now. So introduction, what the CDSL does, I think most of us know because we are part of the equity market investing. So it just acts as a digital locker for the any securities, mainly the shares. So it is in the dematerialized form, and it also an enabler of the securities transactions. Not only it stores the stocks or the shares, but also enables the transactions to happen. So it facilitates holding and transacting securities in electronic form, and the settlement of trades executed on not only the stock exchanges, other exchanges also. So the securities include the equities, debentures, bonds, units of mutual funds, certificates, deposits, commercial papers, treasury bills, and others. So equity includes not only the listed market, even the unlisted companies also, they will have the stocks which are in the CDSL, the depository. So this is the main function. And other services include the e-voting, m-voting, the easy mobile app, and e-locker also, which it is providing. So as we all know, it acts as a depository. So the depository participants like Zerodha or the brokers like HDFC Securities, through them we transact, and through the stock exchange we transact, and finally the buyer will get transferred from the seller, which is the stock or the security in the CDSL, or the NSCDL, which is in this depository, transfers through his account in the depository. So that is what the basically does. It finally gets to the beneficial owners. So it acts as a central agent covering all these depository participants into investors, issuer companies, as well as the clearing corporations. So we all know, we have seen the Harshad Mehta scam, the movie or the show, where we used to have a physical ring initially, maybe 3-4 decades earlier, where everything used to happen settling on the ring physically. Then there was a physical certificate which used to take 2 to 3 weeks at least to settle, and a lot of transparency was not there. So the SEBI recognized this, and in 1996 they brought this dematerialization law, and so that was the need for the dematerialization. So one is the transparency, second is the credibility. So something like an organization which is credible, well regulated by the SEBI, so there is a reduced risk of theft or forgery or damage. With the dematerialization, all these are very much reduced, almost non-existent. The next and foremost is the faster settlement. So it became cost effective as well as time saving, giving more the confidence to the investors to participate in the equity market. In addition to that, it gives the real-time access to the securities as well as the real-time access to transact in the securities. Coming to the history, though it all began with the vision for the dematerialization. So it was the second depository to be started in 1999, which is started as around 25 to 26 years before. Then over a period of time, by 2015, it reached the landmark of 1 crore demat accounts. So it took a long time, almost to 16 years to reach a demat of 1 crore accounts. Then 2017, it became the first listed depository in the Asia Pacific region. Then by 2020, it reached around 3 crore the demat accounts. By 2024, it reached 25 years of operations, and in 2025, it has close to 15.3 crore demat shares, which is a lion's share in the number of demat accounts. So it is a duopoly business. Only two the companies are there. So it has a major share as per the number of demat accounts, 79%. And this company is achieving the increase in the market share every year. This year also 80% of the new accounts which are open demat accounts has been captured by this company. So basically the core services, dematerialization, the rematerialization, that is the conversion of physical securities to electronic form and the vice versa. Settlement of trades, so assist in the settlements of trades done on the exchanges. Transfers of seamless ownership of the securities electronically, even the listed and the unlisted space. It handles the corporate actions like for dividends, bonus, right issues, which rightfully charges from the companies for this. It allows the pledging of the securities as a collateral for taking loan as well as for the margin for trading, and it gets a share of revenue from this also. In addition to that, it started the value-added services over a period of time, having the easy and easiest, that is electronic access to the securities information, as well as in addition to the access for the information, the easiest, that is the electronic securities transactions. Then we all know we get the consolidated account statement by our DMATs, and it gets charged for that also. Then the one more or the second vertical of this, which has been quite established, is the KYC services. It all began with the formation of the CDSL ventures, which will come to detail later. Then it provides e-voting services for the companies, which has become a norm now, especially after the COVID time. Almost everything is getting over by e-voting as well as the the annual events also. So it is all handling that also. Then the e-locker, secure digital storage of important financial documents. However, this is not a very major thing as of now. We know there is a DigiLocker, which is a much more dominant company in that. Coming to the subsidiaries, there are 3 subsidiaries. The first and foremost is the CDSL Ventures. It is a 100% holding of the CDSL. It was mainly implemented with the concept of the KRA, that is a KYC registration agency in the country, and it was started with the association with the mutual funds as early as 2006. It was the first and largest KYC registration agency, and now has close to 9 crore KYC records. So this records, it acts as a revenue stream for this in 2 ways. Whenever a new person is entering to the stock market through a broker by opening an account, if he doesn't have a KYC, this company does the eKYC for him. So it gets the money for it. Second is what is called fetch. Say I'm going to open a account in a second broker. He wants to fetch my KYC data, which is already with the CDSL or the other company. That company or the broker will provide amount for him to fetch the details. So with this too, it gets the amount for it. It also provides the RTA services to around 2,600 companies. In addition, it has some more like the refund processing for the PSL investor claims. There was a scam, some Perlagro global company where close to 50,000 crores of money was involved, and the court had ordered for the refund processing, which this company is also handling. And we also know that Prime Minister that Jeevan Bima Yojana, the savings account in the rural areas which have been opened, and all savings account openers are provided with the 2 lakhs life insurance with a nominal amount of around 400 rupees of the annual amount. So if somebody claims it, whether it's any dupe or the doubling of that insurance claim, that part is also that activity is done by this company because it has a large database. So all this it carries by Aadhaar-based services, by eKYC, it does e-signing services also. And also it gets the online account opening does, which gets it money also. And also GST Suvidha provider services. So this CDSL Ventures is quite established, almost providing revenue of close to 180 crores per year. So quite a significant revenue stream for this company and expected to continue further. The second subsidiary is the insurance part, the Insurance Repository Limited or the CIRL. So it similarly acts like a demat account for the insurance part. So if somebody buys a insurance, we get a physical certificate or a e-certificate online. Similarly, we can get it in the form of a demat form also. So it acts as an insurance repository formed with the IRDA the regulations. It holds 52% and with along with 10 other insurance companies as the promoters. It already has partnership with 45 life, health, and general insurers. So, and it holds more than 18 lakh policy as of now and doesn't charge extra to the policy holders. So it forms a balance between the for the insurance between the policy, the issuing insurance companies as well as the policy holders. Right now, this is in a very not very like we can say infancy stage, close to around 1 to 2 crores of revenue per year, not much as of now. Coming to the third subsidiary, that is the CCRL. It is the Countrywide Commodity Repository Limited, where it started operations in 2017. It operates under the Authority of Warehousing Development Regulatory Authority. Everything is all under regulatory authorities only. So it facilitates ownership and transfer of commodity assets in electronic mode. So somebody who is having a commodity, he can go to a nearby registered the warehouse and park it there, get a certificate which the CDSL issues because that partner who is giving that is a partner associated with the CDSL, already a registered one. And with that receipt, the person who has kept the commodity there, either he can pledge for taking loan or he can sell nationwide by e-selling. So that is what the commodity along with that, like it serves the commodity exchange also. So these are the three subsidiaries which are the, and this also the commodity repository also is not much, very much into like not very much bloom now. It is also providing close to 1 to 2 crores of annual revenue as of now to the CDSL. Coming to the shareholders, the promoter is the, as you all know, it's the Bombay Stock Exchange holding 15%. Why 15%? Because the SEBI regulation that market infrastructure institution like CDSL or any like this company should have maximum 15% holding by the promoter. So other like there is a significant holding by mutual funds close to 7%, foreign portfolio investors by 11%, and some amount of by bank, financial institutions, and alternate like investment funds. LIC has a holding of 4.4%. Among the mutual funds, Nippon India Small Cap Fund has close to 2%. Parak Parik has 1.08%. The Parak Parik Fund they had invested in 2020-21 and they were holding around 4.2% in that. So they reduced this to 1.08. So they in the last meeting when they came to Bangalore 2 weeks back for the investors meet, this question was raised: why, like being in such a secular growth story company, what is the need for them to reduce from 4.4 to 1%? So what the Tucker sir told was like if in a mutual fund, if a new person is entering, he's buying the companies at the current price. So we as a unit fund, we bought maybe very much less, 10 times less around 3-4 years back. But now once it is in the part of the unit fund, the new buyer or the entering the person with a new NAV will be buying at the current rate, which I feel like there is a lot of other opportunities probably for the value. This one I'm like coming out, but we are not planning to fully exit. Then the government of Singapore has 0.89%. So shareholders, the institutions has 46%, Retail plus the HNI and the family offices hold close to 53%. Coming to the profit loss statement for the last 11 years, we can see that in the last 1 decade, the sales or the revenue has grown 10x from 105 CR to 1082 crores. So 10x jump in the revenue. Similarly, in the PAT, net profit has grown 13x from 43 crore to 526 crores. So it's a long-term growth story which itself has proven in the last 10 years. Coming to that is the profit loss statement. So what are the revenues which are getting to the CDSL? So this is the first on the left hand side is taken from the last annual report of the 2024. These are the various streams which comes into the CDSL. So just to be mainly what classified into annual issuer charges, which the company charges to the companies. Once the company gets listed or unlisted, has a shares in the demat form, they have to initial money they have to give, and annually they have to give. It depends on the number of shares which they have. It may be as less as 9,000 rupees per year for the company to up to 75,000 rupees per year. So this is a segment which is quite stable and growing every year. Next comes the transaction charges. Like whenever we sell the demat, the stocks from the demat, when it gets debited, the seller is charged around 14 rupees plus GST per trade. Then third is the IPO or the corporate action charges. Whenever the company comes with IPO, the new stocks are getting dematted into the CDSL or the other company. So they get the money as well as the corporate actions like dividend and the other things. Next is the online data charges. That is the one that they get through the CDSL ventures. They have a lot of data within them for over a period of many years, which they are encashing, and it is growing every year. The other charges are also quite substantial, mainly the interest which they generate with the cash they have and the investments they have, and the other ventures which they have or the subsidiaries which they have. So coming to these, what are these revenue streams? 55% of them are related to market link. Whenever there is a good market is in a bull phase, people are very much optimistic, a lot of buying, selling is happening. The share of the revenue of these segments goes up. Whereas there is a 45% of around non-market link. This provides an annual, regular, stable income. There is not much of any decline in this. As we saw in the last 10 years, this non-market linked also is growing by leaps and bounds. So we can see that annual issuer charges, that is, it is not linked to market. Transaction charges, definitely yes. IPO corporate action charges, definitely yes, because the companies try to come out with IPO at the time of the peak bull market, as well as they issue the corporate actions like bonuses, splits during the bull market time. Online data charges also they are linked to this market because more people get into market during the bull season. So the KYC service charges are more during the market, the optimism time. Consolidated e-cash, that is a consolidated account statement charges. It is not market linked. E-voting, it's an annual event, no market link. E-KYC, obviously market link because more and people come and more companies fetch the details. And other the miscellaneous items are also not market linked. Coming to the expenses, the fixed costs are employee costs, which is a significant amount. Second is the technology expenses. It has to invest every year in the IT infrastructure, the cyber security, as well as the software license to provide a good service. This is also a significant expenditure, one-time expenditure, capex, as well as the annual maintenance fees also is quite high. It has to pay higher regulatory as well as depository related charges to the SEBI and other depository institutions, close to 40 crores in the last year. And admin and other expenses like land, rent, legal charges are also quite significant. And non-cash like depreciation, amortization around 27 crores. And it has CSR donations, which is a discretionary expenses. So if we see this revenue streams as well as the expenses, CDSL as a company doesn't have much control over how much it can increase its revenue stream or how much it can control over its expenses. Most of the expenses are fixed. Even if the revenue is going less because of the market is low, say for a year or half a year, still its expenditure will be like quite high. It cannot cut down on its expenditure. However, once it has put a critical infrastructure in a form of IT infrastructure, which is good cyber security, whenever a lot of the transactions happen in the bull phase, it gets to enjoy. So traditionally for the last 10 years, it has shown whenever the annual sales growth has increased, the operating profit margin also has increased. Whenever the sales growth has decreased, the OPM percentage margin has also decreased. So 55% is market linked, but however, it is quite a long-term secular growth story. Coming to the quarterly results also, we can see the same cyclicality, what I will say as a shallow cyclicality. In the Q2 of the last year, the market activity was high, hence the revenue was quite high, EBITDA was high, as well as the profit was high compared to other quarters. So as we saw, the transaction charges, the annual issuer income charges, IPO. So this depends on the market linked or non-market linked, even on basis of the quarterly also. Coming to the balance sheet, borrowings negligible, close to nil. So with a good, strong balance sheet. Last year in 2024, because it is the 25th silver jubilee year, they gave a bonus. That is why the equity capital became double. And there is no, it doesn't require any equity dilution or require any raising of funds at all. It has a strong cash flow from the operating activity, and most of the operating activity cash, other than it pays the tax, gets accumulated into the company. So it is very good, strong operating cash flow. Coming to the SWOT analysis, the strengths, it's a duopoly business. The other is the NSDL, which we all know. In spite of being a duopoly business and NSDL being the first company to start around 1996, around 3 years before this, in the number of the market capture in the terms of number of accounts, it's the leader, close to 79%. So it has a strong market presence, and it has consistently delivered a strong financial performance, and it's probably going to produce the same. It has got a wide network and a client base, over more than 10 crore demat accounts, and with thousands of depository participants. It has got a strong regulatory backing, operates under SEBI regulations, which has good credibility and stability in operations. And it is a digital infrastructure, it has a strong technology backbone for running this. So the SEBI has not stopped anybody from opening a third depository company. Around 2017-18, there were some more laws which made it easy for other companies to open. However, nobody has opened. We'll come to that later also. Coming to the weakness, it has got limited diversification, heavy dependence on Indian capital markets, limited global or sectoral diversification. Some of the countries like Nepal, as early as 2010, had approached CDSL to start a depository company in Nepal. So it acted as a consultancy for them to start a company there only, and it got fees for it. But it itself has not been able, it cannot, or it has not progressed beyond the domestic market. Coming to the price regulation, whatever the charges it provides services, it's all regulated. Every 4 to 5 years, it has to sit and negotiate with the SEBI to increase its price. Both NSDL and CDSL sit, and over a period of 4 to 5 years, they get their charges increased. So they don't have the price, what I would say, they cannot charge as per their will. But being a increasing trend or a secular trend, probably there should not be much of a concern. So some reliance on the market volumes, because 55% is related to the market volumes. In terms of the market share, in terms of the value, NSDL holds the strong position. 80% of the market value in terms of the asset under management or the custody value of the demat accounts, 80% is by NSDL. Only 20% in terms of the money wise, the value wise, CDSL holds. So it is one of the weaknesses which it has not been able to achieve or come over up till now. Coming to the opportunities, like there is a growing financial inclusion in the India, rising awareness in the retail participation in stock markets directly to equity or to the mutual funds, especially in the tier 2, tier 3 cities. So a lot of people are opening demat accounts every year. Expansion of services, potential in areas like insurance repository, e-voting, digital KYC, record keeping of unlisted companies, increased IPO activity. Every year we see a lot of companies getting listed. So a lot of revenue coming or the companies getting added to the CDSL. Coming to the technological advancements, blockchain, AI, automation could enhance the efficiency as well as create new offerings for this company. The insurance demat, if there is any regulatory favorism where the promotion of demat of the holding of the insurance units, so it is going to benefit the this company. Right now, there is no regulatory favorism for people to hold in terms of the demat units for the insurances. But with the period of time, if there is any thought process of the SEBI or the government or the IRDA in that event, this company is going to increase its revenue. This coming to the threats or the risks. First and foremost is the cyber security risk. As a financial data hub, it is exposed to data breaches, cyber attacks for the data it already has, as well as for the transaction events also. That is a very major risk. Second is the regulatory changes. Changes in the regulatory policies of the SEBI could affect the revenue models or the operations. Competition from the NSDL and the new entrants, it has always been a threat, but till now the company has handled well and it has been growing in spite of the threats. Coming to the market volatility, economic downturn, low investor sentiments, global financial crisis, this can reduce the account openings as well as the trading volumes. So coming to the entry barriers. So as I said, there is no regulation stopping anybody opening a third company. However, there are a lot of entry barriers. One is the licensing cost, which is quite high. It was 100 crores last when I went through it. Coming to the switching costs, if I already have a demount account with one broker, unless with some charges or if I'm not happy with the broker, for an investor, I don't think of changing to a second broker. So I don't think my demat account or the depository account also will change. So a lot of switching, the barrier will be there in terms of the cost as well as the psychological barrier also. Third is the regulations. A lot of regulatory things has to be satisfied by the new entrant, which is quite difficult and stringent. Second thing is the operating leverage itself. These two are the companies which are sitting on the last 20, more than 25 years of whatever they invested, whatever the data infrastructure and the software infrastructure, software and hardware infrastructure they have built upon. Somebody new entrant, they have to put a lot of the amount on that. They have to build a lot of data. They have to acquire new customers and they have to wait till their operating leverage comes to charge on them. So till that time, they have to sustain with less revenue or even with, to some extent, probably going for losses also by giving extra benefits. So whatever the data they already have with them, that is a very strong existing barrier for these companies. So these are quite strong entry barriers for CDSL for a new entrant to come upon. The middle part or the second part which I am showing in this slide is so as I said, this company doesn't have much role to increase its charges by itself. It's all regulated. But as we see for the last 25 years, everything has been on a growing trend. The number of active demat accounts, the volume of the custody value, as well as the volume of the custody volume in terms of the numbers. Everything has been growing. So does it grow in the future? Obviously, yes. India is a growing country in the equity culture. Yesterday itself, Rashmiji, who presented the KFIN, the third part is from a slide which she presented yesterday. There is a mega trend, which I can say as a long-term secular trend, growing in the Indian equity, mutual funds, as well as alternate investment funds growth. So in addition to the equity growth, the mutual fund growth which happens, two way it can help the CDSL. One, the company or the mutual fund asset management company, they have to buy and sell the stocks, which they do regularly. So this should happen through CDSL and NSDL. As of now, the NSDL has upper share with the asset management companies. CDSL has to find out like how to they're going to gain these AMCs to come to them also more. That is one aspect with the mutual fund growth or the SIP growth, which is happening with how this company is going to benefit. Second thing is the demat units, which the mutual fund, the individual investor also can buy. We can either buy traditionally directly by the company in the physical format or even directly through the company by the online or to the demat format also. So a lot of pros and cons are there, which I will not touch upon now with respect to the demat holding of the mutual funds. So all this mega trend, which is we are all expecting for the market infrastructure institutions, this CDSL will be the center stone to all gain from this. Coming to the peers, so it's a duopoly business. We all know the NSDL. It is still unlisted. It became the first security depository to reach 500 trillion in terms of the asset value it is holding in custody last year in September. It has a good infrastructure to support the implementation and advanced settlement of cycles such as T+1, enhancing the market efficiency. Both CDSL and SDL have developed or put a lot of money and developed good lot of efficiency in this. Despite trailing the number of accounts, 80% of the custody where they are holding. So one more significant difference in between NSDL and CDSL is the retail investors, they are having more accounts with CDSL. The institutions, they are having more with NSDL. The NSDL has better the financial as well as the approach towards these institutions to get more towards them, which probably CDSL has to look into. Even the depository participants who are the brokers, the tech savvy or the new age brokers like Zerodha, Grow, Angel One, they are all more into CDSL. Whereas traditional brokers like HDFC Securities, ICICI, these are all more with the NSDL. So these are the two major differences. Coming to the revenue difference, if you see the last 5 years, CDSL has grown at the revenues CAGR of around 34%. NSDL growth is 18%. So CDSL definitely has shown in the last 5 years that it is growing much better compared to its peer. Coming to the net profit also, it has 419 crores in the last and it compared to 258. And in the last 5 years, PAT growth of CDSL is 41% CAGR, whereas for NSDL it is 24%. Some of the fees for the institutions, the NSDL is providing at a lesser price, probably that may be one of the reasons. And second is the last 5 years, the number of accounts opening, the market share is gained by the CDSL close to 80% in the last financial year. So for the last 5 year CAGR also, the business in terms of revenue, CAGR, the CDSL has an upper end compared to NSDL. One more point why I presented this company at this time is because the peer NSDL is coming to the market. So the SEBI and all the DRHP, the part has been cleared. It has to come for IPO before the next month, July 31st. Everything has been cleared. So mainly the revenue is quite close. In the last financial year, CDSL, the revenue was 1,080 crore, whereas this has 1,420 crore. Profit margin, as I said, NSDL has a slightly lower profit margin of 24% compared to 48% margin of the CDSL. CDSL has an operating profit margin close to 60%, PAT margin of 48%, which is quite high. The market share in terms of accounts and volume I've already covered. So NSDL is coming probably this month or next month, which will be offered for sale. IDBI Bank is the main promoter as of now. It will be offloading 11%. NSE is the main, also the main second promoter, holding 9% stake. Some of the banks like SBI, HDFC Bank, Union Bank, and other shareholders are also selling. So basically, this move has to align with the SEBI's ownership norm, where finally, after a few years, where the company, the ownership of the promoter should be limited to 15%. So the coming month or next month, probably the NSDL will come like to the market. So as per the rumors in the gray market, they're probably supposed to come at around 750 to 800 rupees per share, even though last month it was selling at around 1,050 rupees per share in the unlisted market. So if it is assumed to be coming at 750 to 800 rupees per share, the assumed market cap of the company of NSDL will be around 15 to 16,000 crore. So we have to maybe have some opportunity when we compare both of those companies. Probably we can align into which company maybe has a next alpha as a individual investor for us. Coming to the technicals, the above first chart shows the long-term chart of the monthly chart right from the time of IPO in the 2017. So as we saw the business, it is market linked. Whenever the market is good, it gives a good result. Obviously, the price goes up. Whenever the market is not doing well, it obviously the price is also down. From the time of IPO up to 2020, where we had the 2018 and 19, the bad time for the market, especially in the mid cap and small cap, CDSL price had went down. And next, subsequently, post-COVID, so the boom, the price went up. Again, after that, once the correction in the market was there, the price went down for a few months. And again, after that, again, after 2023 post, again, there was a good increase in the price. And probably now it has started to correct. So people who are very good in not only in the fundamental valuation, but also are good in technicals, probably see into this and then find a good entry point. So whenever there is a downturn turn, that is for short term, close to around 12 to 18 months, but long term has been quite long, around 18 to 24 months. So there is no hurry to get into this company. You can watch, see fundamentally as well as technically. So right now the company had given a good entry point in the last 2 months back because of the all this tariff war as well as the Indo-Pak, the whatever the conflict what was there. Still there is golden cross has not happened. The price has started slightly to decline. Probably it might get stabilized after the NSDL IPO in around that time, and probably whatever the global conflicts is there. Coming to the valuation, fundamentally now it is around 35,000 crore market cap with a PE of 65, with a good operating free cash flow company. So initially up to 2020, the PE whatever was there, it was less. I don't think it will come to that PE again, because now all these other the subsidiaries should start kicking in and give more money. So whatever the PE here was around median PE of 40 or the base PE, that I think will form a base PE or the good PE to enter in the future. So basically, it's looking into it, the functioning, the fundamentals of the company, the technicals of the company, evaluation of the company, performance in terms of the business, as well as the stock price. I feel I would like to see it as in a two-way. No doubt it is a shallow cyclical company. It's not a deeply cyclical. So we will get good entry points to enter. And once we enter, probably it is a company which to be kept for a long time, because it is going to be a long-term secular growing company, probably for the next decade at least. So this is my presentation. Thank you everyone for the patient hearing. Thank you, Puneet sir, for giving me an opportunity. Thank you.
Wonderful, Pramodji. So most of us know CDSL, okay, just something goes into that DMAT basically, and that's how we know it. And you went deep inside and why it is important for us. Very well presented. Thank you.
Thank you. Thank you, sir. Thank you.
So any questions from audience? Okay, if there are no, then we move to last presentation of this ALD, presented by Sunny. Thank you, Jaspritji. You can stop sharing. Pramod, you can stop sharing.
Yeah.
Yes, Sunny, you can see if you can share the screen.
Is my screen visible?
Yes, it is.
Is it completely visible
Yes,
now?
yes. Yeah, you can start.
Am I audible?
Yes, you are.
Okay, thank you. Hi, good evening, good afternoon all. This is my first presentation anywhere. So if any problem or any mistake you see, kindly forgive me. So today we are going to talk about power sector. So in the financial year, at the end of financial year 25, total installed capacity at the end of financial year 25 is around 475 gigawatt in India, out of which 106 gigawatt was solar power. And in the financial year 25, total solar power installation was 23 gigawatt. And expected installation of solar power for FY 26 is around 35 gigawatt. So, and one more data, Government of India under the National Solar Scheme has mandated total solar installation of 280 gigawatt by the end of FY 30. So looking at the data between FY 26 and FY 30, total solar installation is expected to grow at 18% CAGR. These are the some growth drivers for solar power installations like National Solar Mission, under which government has a target for installation of 280 gigawatt of solar power. Then solar rooftop scheme, Kusuma scheme for agriculture purpose, and many other programs. The most of the all programs are PLI scheme given to the manufacturers of solar module manufacturing company and solar cell manufacturing company. This is the solar PV value chain under which the silica is extracted from ground, then it is converted into polysilicon, then it is converted into ingot, and then ingot is converted into wafers, and the solar cell is made. And this solar cell is combined with ENA, backsheet, solar glass, and junction box is made into solar module, and the solar module is installed for solar power. So today we are going to focus on a proxy company which is in the solar solar power manufacturing, that is Solar Glass, and the name of the company is Borosil Renewables. It is India's largest and only listed company in India, started in 2010 by Mr. Pradeep Kheruka. At the time of starting in 2010, total installed capacity of Borosil Renewable was around 180 ton per day. And at the end of financial year 25, it has a total installed capacity of 1,350 ton per day. So Borosil Renewable, it is India's largest and only listed company in solar glass manufacturing. Present capacity 1,350 ton per day, which is equivalent to 8.5 gigawatt. They have already announced for capacity expansion of 600 ton per day, which will be completed by the end of December 2026 as per the management. The amount which is required for this capacity expansion is 950 crore, which is going to be funded through debt and equity. Company has already raised 570 crore from promoter and other investors. Promoter have infused 100 crore in this preferential issue, and some known investors like Nevesai, S. Gupta family, and Saket Kapoor also invested in this preferential issue. Company has further informed the stock exchange for raising 500 crore for capex. The current market price of Borosil Renewable is 557 rupees. In the year 2022, Borosil Renewable acquired a German company called Interfloat Group at a valuation of 7 times EV/EBITDA, and this acquisition can give them around 500 crore of revenue, and this will provide them a easy access to the European Union and USA for export. The present capacity of Interfloat Group in Germany is around 350 ton per day, which is equivalent to 2 gigawatt. However, total solar installation in European Union happened in about 25 was 55 gigawatt. This acquisition, which they acquired in 2022, presently has in downturn due to the rise of fuel, that is gas, in Europe due to the Russia-Ukraine war and other ongoing issues. This is the capacity planning of Borosil Renewable. In 2010, it was having 180 ton per day of capacity. At the end of FY24, total 1,350 ton per day was capacity, including German plant of 350 ton per day. And recently, they have announced capacity expansion of 600 ton per day, which is going to take their total capacity to 1,950 ton per day, which is equivalent to 12 gigawatt. These are the some peer group of Borosil Renewable. None of these are listed in India. The largest is Borosil Renewable, and second largest is Visakha Renewable. Third largest company, that is Gold Plus, having a total capacity of 300 ton per day. They have filed the DRHP with the SEBI, and they are going to come with their IPO anytime. These are the capacity expansion plan of different solar glass players. So first one is Renew Energy or Reliance New Energy. They have a capacity expansion plan of 2,000 ton per day, and they will be for internal use. Then the presenting company Borosil Renewable having a capacity expansion plan of 600 ton per day. Visakha Renewable, total capacity as on date is 660 ton per day. They have also planned capacity expansion of 1,100 ton per day. Gold Plus, present capacity 300 ton per day, and they have a capex plan of 300 ton per day. Emerge Glass, they are coming with new capacity of 300 ton per day. Triveni Renewable having a present capacity of 240 ton per day. They have a capacity expansion of 1,100 ton per day. Govind Glass having a present capacity 150 ton per day. They have no any capex plan. Indo Solar, they are coming with the new capacity of 1,000 ton per day. So as on FY25, total solar capacity in India is 15.3 gigawatt. However, installation in FY25 by 23 gigawatt. And at the end of FY26, total installation will be around 30 gigawatt. And expected installation for solar power is around 35 gigawatt. So there is a clear gap between supply and demand. So looking at the fundamental, presently Borosil renewable in the last 2 years is loss making due to the dumping of glass from China and Vietnam. However, the company has maintained its debt to equity to 0.25. Promoter has recently increased its stake using preferential issue. And in the last 2 years, companies ROC and ROE both are in negative territory, but this is going to improve. This is the technical analysis of company. Company is range bound between 420 and 615. So anything which is going to happen in this company only after 615. These are the thesis on Borosil renewable. First of all, the major thesis is anti-dumping duty on China and Vietnam, which has been provided by government for 5 years. This is valid till 3rd December 2029. Second one, countervailing duty on Vietnam for 5 years has been approved by Director General of Trade Remedies, but it is to be notified by Finance Ministry. However, it will take maximum 6 months because whenever DUTR confirms CBD or ADD, the Finance Ministry only approves it, but it can maximum take 6 months. The third one is for German plant, which is European Union has mandated that with effect from 1st January 2026, minimum 40% of all the raw material or all the equipment which is used in solar plant will be manufactured within European Union. And the last thesis is formation of newly government in Germany, which happened in February, and the two major party in Germany, that is Social Democratic Union and Social Democrats and Christian Democratic Union, form the government with combined majority, and they are providing some relief to the manufacturing company based on Germany. Some antithesis: China may start dumping using Malaysia. As present, there is no anti-dumping or countervailing duty on Malaysia, and in the past, during the 22 and 23, China were dumping their solar glass using Malaysia. So this remains their biggest problem. And Germany may remain loss-making due to government not supporting the local module manufacturing. Capex may go delayed due to some issue. And Borosil Renewables whole plant is due for scheduled maintenance, which is within 1 year, and that can take them max to max 2 to 3 months. The risk of fire is always there. Risk of fire always there, and it already happened in Germany plant in July 2022. And raw material price volatility, major raw material is soda ash and fuel cost. So this is the valuation on the best case from my perspective at the end of financial year 27. The sales is going to be around 2,500 crore and the EBITDA margin is going to be around 25 crore. So total EBITDA is going to be around 625 crore. And looking at the bull, bear and base case scenario, the market cap will be around, in the bull case, 12,500 crore, in the bear case, 6,250 crore, and in the base case, 9,375 crore. And present market cap is 7,382 crore. So you can take as per your as per you and take your decision. That's it from my side. Thank you.
Thank you, Sunny, for the presentation on. So it's a kind of a ignored stock at this point of time. Many of you might have ignored it, but I think promoters have been bought sometime recently. And
Yes.
even I think Saurabh was bullish sometime back, but the stock price did not move much after this. Something is restricting it overall, but once it breaks, I think it looks to be a story to see. Good presentation. Any questions for him, Sunny? If no, then I will go to the audience poll, Amar, to Amar, and conclude the session after the audience poll. Last two questions, get a chance to win some prizes. So, Sunny,
Yeah.
you can stop
Sunny,
here.
can you stop sharing? Yeah.
Sorry.
Okay, here we are. Again, choose option A, B, C, basically, based on your
Yeah.
understanding. You go to the first question. So, non-banking financial companies cannot be classified as what? So we have enough answers, enough right answers. So we'll move to the next question. I will put a stop. We can stop here for the next question. What is the role of depository in the NSE? Okay, I think we have enough answers again. We can stop here itself. So that brings us to the almost end stage of ALD. I think we have done well over 3 days, 20 companies analyzed. And I think the quality of the coverage, the depth of coverage has improved really from ALD 1.0 to ALD 5.0. Thanks to all the presenters. It's successful because of all of you. It's just me, Amar, and I think Pankaj are just leading it to some extent, but I think a lot of you have contributed towards it. So just give me your honest feedback, maybe DM or maybe in the group. I'm fine. What we can improve, what we cannot, and we'll target to come back much more better in the coming days. Tentatively, we are trying to get back in December. I don't know whether it was feasible or not, or maybe in November, but next year is somewhere targeted around that point. So that's all I have. I have shared the link of the presenters ratings for 15th June. I hope please you can put it. It will take 2 minutes. There is a presenter prize, so I will go over all the 3 days of ratings and check on who did best. But don't worry, even if you don't come on the first, all of us are winners basically because we have jumped and learned something out of it for our own thing itself while analyzing a company. So that's the mindset I think we should keep. So that's all from my side. I think we can conclude here. Anything somebody wants to share? Just last few comments. Otherwise, we can close. Okay, I think no further comments. Then I will stop the recording and thanks a lot for your weekend time. We'll meet again sooner. Bye, all.